to log in as me here right now. So I have to shut you down
I'm also a panelist and a host, so I don't know why you need to do that, but go ahead.
because it's my account. So you want,
I think you need to do it. I keep making suggestions.
I like our background. Looks pretty cool. I think I'm more
What hashtags or who should we be tagging in posts through the event?
we tag each other, I guess. Mm.
What'd you say, Tracy?
Well, I was just saying it looks like your network connection is slow. So you keep bouncing in and out of
Okay, I don't know that I'm in as a panelist though. So, let's see.
Yes, Laura, you're in as a panelist. We can see
Okay,
your.
so can you co-host me, Amor, since you're a host?
Yep. Hold on one second.
And then I'm gonna disconnect this audio.
All right. Welcome, everyone. We're having a little bit of difficulty right now, but we are working through it. Laura. Mhm. Laura, let me know if that worked for you.
Yeah, you made me host, but that's fine. I'll co-host you back.
Okay, thank you. All right, welcome everyone. We are live. We have more people joining. We are so excited to see you. So excited.
Why are we doing that?
Let's check in our
I'm trying to
sound
get you logged in and it's giving me grief.
on
We're not
Facebook.
doing it. We do it every
Yes,
day.
we are live on Facebook. And we are just really excited. And while we have some people kind of working behind the scene to get everything set up, I just want to welcome you to the summit. We are so glad that you are joining us. And we have lots of people here from all over the country ready to build wealth, right? So we're going to be getting started in just a few moments, as soon as we get just a couple of more things set up. But while we're waiting, maybe
No.
there.
Need that.
Did you say something, Tommy?
Do it.
I've already cut that. Like we were already there.
Maybe you guys need to mute while you're figuring it out.
Yeah, and maybe we could just have people on the call introduce themselves while we have some behind the scene tech issues going on. Tracy, where are you from? Why don't you introduce yourself?
I'm Tracy Gore. I'm from Oklahoma. I'm a fund manager and author and speaker and coach. So I'm here to help out any way that I can as a panelist. And I speak tomorrow on how to invest in funds and syndications and investment club. So
Yes, so excited, so excited. Welcome,
thank
Tracy.
you.
All right, Deanna, where are you from?
Good morning, everyone. I currently live in Palm Springs, California, but am building some beautiful luxury homes in gorgeous Scottsdale. So very
Woohoo.
fun to be here. Yes. I love, and the best thing about building in Scottsdale is my feed is now filled with all these incredible things going on in the city there, all the new restaurants and things. So very exciting. So I am a coach and author as well. Just working on a few things actually, and so glad to be here. I, like Tracy, will be speaking tomorrow about a couple of different investment streams, but really giving you a tactical look at building luxury homes. But even more so, we are going to talk about the all important F words. And I think all of us need to understand what our F words are. So I look forward to that one tomorrow morning.
Oh boy, I cannot wait to hear the F words. Let's go. Okay, great. And Katya, hey,
Good morning.
good
My name is
morning.
Katya. I'm 21 years old. And I started with the Landshark Mastermind about 3 months ago, and I'm loving it. I am currently studying entrepreneurship, and I absolutely love learning about investments in real estate. So I'm super excited.
Great. And you're in college, right? So you just finished, what year was this for you?
Say that one more time.
You just finished your school year. What year?
So I actually have one more semester left, and then I'm graduating.
Yay, congrats. Okay, great. And we also have Victoria here. Victoria, where are you at in the country?
I am joining everyone here from Chicago, Chicago, Illinois. So excited about this summit. You guys will see me on screen, but I'll be working behind the scenes, in chats, dropping you guys links, anything you need. But I'm super excited about this summit. Not only am I a part of an investment club, but I most definitely am still learning on how to invest my money. So this is going to be an exciting space for me to learn and grow and invest.
Uh-oh. Go ahead.
Just sharing how excited I am about this. Did you hear the echo? It was just like, yes, 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 yes. So excited about this. So yeah, please feel free, guys, to drop questions,
Yes.
comments in the chat, and we'll be responding to you guys.
Okay. All right, great. And I believe we have Blake here as well. Blake, do you want to introduce yourself?
Sure, I can introduce myself. I'm currently on a run, so I apologize for this background noise. Same with Katya. I'm a 22-year-old. I'm from Southern California, and I'm currently at Cal State Fullerton studying business analytics. Just similar to Katya, we both are interested in investment and money and then how to make our money work for us. We're not working for our money, so we're just here and hungry to learn.
Oh, that's so amazing. I wish I was thinking about that in college. I wish. So yes, great to have you all here. My name is Amor. I am on from Orlando, Florida. I'm also a real estate investor, and also I am an educator, and I can't wait to talk more tomorrow about investment clubs and how like no matter where you're at, like we all can invest, and no matter how much money you have, you can get started. And so I am excited for our two co-hosts, and they have been working hard behind the scenes to get everything aligned and everything like that. Laura is also here. She is amazing real estate investor. Laura, are you able to just tell us a little bit about yourself and where you're located?
Not right now. I'll do it.
Okay, great. She's working and making sure we got it together. So totally understand. Okay, so before we get started, a couple of us are a part of have been able to connect and learn so much from Tommy and for Catherine in that the next 3 days, you're going to learn so much more about them, about investing, and you're going to be able to take some practical application points and apply them to your life. And so that's the amazing thing about this 3 days. So I want you to just get your notebook out, get your pen out, and we are getting ready to take some notes. And I want to bring the phenomenal Catherine to our stage to share a little bit about what we're going to be doing today. Welcome, Catherine.
She's muted.
Oh, maybe they're still having a. Yes, amazing, Catherine. Yes, she is. Okay, might be still having technical difficulty on that end.
Okay, can you all hear me now?
Yes, you can hear you.
Okay.
Woo-hoo. Welcome, Catherine.
Super fun technology.
Always,
So
always.
welcome everyone. Super excited that we're here. And this is a fabulous way of Katya and I had a whole conversation this morning about perseverance, persistence, determination, and where is it that we get stopped? And where is it that we persevere and we push through? And this is one of the things about being investors that all of us share this common thread is that we are all here because we believe in something greater, something bigger. And the number one that I believe we all live inside of is that we leave every person, property, and community better than we found them. And that is a whole purpose behind like why the vision for creating this whole thing is literally about creating 7 streams of passive income for every single person in this country. And why do we do that, right? Why do we bring this is more than just financial literacy. This is more than just knowledge. This is literally all about having people take action so that they're literally creating these multiple streams of passive income, not only to protect their families, but to literally go make a difference and make an impact in the world.
Yeah.
So creating this summit, this community, the bigger thing inside of what we're building literally is bringing all the beautiful minds. And here's your first piece of homework. So you're going to get lots and lots of homework. So everybody, you want to make sure that you are absolutely taking lots of notes. And your first piece of homework is go read the book Who Not How by Dan Sullivan. So what you're getting over the next 3 days is the who's that know how. And the reason for this, it's all about, I'm committed to collapsing timelines and adding commas to bank accounts. And how we do that is asking better questions. So Keith Cunningham, another book for you to read, is The Road Less Stupid. He says we don't need to be making more or better decisions. We need to be making less stupid decisions. And that comes from asking better questions and taking time to think about it. And part of the asking better questions is stopping asking, how do I do this? And start asking who already knows how, and then plugging into them and getting the benefits so that you can all collapse the timelines in the learning curve and do it better, faster. and of course get the commas to go make the impact. And so here's the other piece I want everybody to understand is that we're talking about passive streams of income, not active. Now, all of us here, everybody has active streams of income. That means your earned income where you're trading time for dollars. And your active income needs to go buy assets that provide passive income. And that's what we're going to talk about over the next 3 days. And I'm bringing the who's that know how together so that you can plug into it and get the benefit and have the 7 streams of passive income. Your passive income now pays for your lifestyle. So when you understand that, and that's the piece that schools don't teach us, this is what you're not taught in schools. So again, write this down. Your active income is meant to buy assets that provide passive income, and your passive income pays for your lifestyle. So literally over the next 3 days, this is everything that we're covering, and we're bringing the who's that know how to pull this all in. So we're very, very excited about this. So excited to have you all here, and we're going to dive in and just be prepared to take tons of notes. If you want, if you're going to miss any of this, know that you can upgrade your ticket to the VIP ticket. And what does that give you? That gives you access to all of the videos forever. So having the videos to be able to watch them over and over and listen to them over and over in my world, like I listen to books, like all the things multiple times because each time I get something different. So you want to make sure you can upgrade for that as well.
It's in the chat. Link is in the chat.
The link is in the chat if you want to upgrade to that. Yeah, without further ado, I want to introduce our MC and one of my partners. So Tommy D.
Well, we've got 2 of them. Good morning. My name's Tommy D. I'm one of the MCs, a more reporter who did a wonderful job getting us through the technical difficulties. She's stuck on frozen now. It looks like she's now having technical difficulties. So, oh, there she is. I knew I was waiting for the teeth. I needed to smile, right? Like, so, and so, all right, good. So we're all connected this morning. So good morning. And so, yes, to Catherine's point, like active income buying passive passive assets or assets that create passive income, but she also left out the protection that's necessary beyond that. And we get into that in day 3 with the opportunity zone stuff. So what I did was we put together a presentation to kind of help people understand this stuff. And who's running the like somebody needs to be running the panelists and I need you to be running the podcast, like the PowerPoints and stuff. So let's get the PowerPoint up on this machine. There we go. And hit the play button. And so what we're going to be talking about over the next 3 days, I'm going to kind of summarize it here in the first hour. We're going to have Adam come on at 10 o'clock. And then we're going to talk about, today we're going to be talking about the structure of Titan 23. And what really brought all this to mind for me is the, click to the next one, is the, anybody remember the TV show called The Beverly Hillbillies? Raise your hand if you like to remember Beverly Hillbillies, right? And so if you remember the Beverly Hillbillies, Uncle Jed basically had discovered oil on his property, and then he had to turn around and basically move to Beverly Hills to spend all that cash. Like he had way more money than he knew what to do with. And so what he ended up with were fund managers, asset managers, and all that stuff, right? So what he wanted to do is just kind of sit back and enjoy life and be a simple life, right? But the people in Beverly Hills wanted to always complicate it. And it was what happened was Uncle Jed became an accredited investor when he struck that black gold Texas tea, right? So much of what we like to do is for our investors is give them the Uncle Jed experience, right? So giving our investors the Uncle Jed experience, we explain things to them that where wealth can be chaos, like underwriting multifamily developments, navigating 506c stuff, doing opportunity zone tax codes, and having to learn all of that. That's wealth through chaos. Whereas wealth through freedom is found through predictable structured income, passive capital deployment, and living the accredited simple life. And so, you spoke to this earlier, Catherine, about how you've created this ecosystem.
So, and it really does come down to an ecosystem, right? And so that's a huge part of what we're presenting here to have people understand. So this is not, again, like I said, not just a financial education, true education inside of like taking action. I always tell my twins, I don't care what you know, I care what you do. So bringing all the pieces together, building a team, making sure you have like all the pieces in place, the who's that know how for all the pieces. That's how all of this comes together, and making sure it's done inside of the true regulation that needs to happen for being a wise investor. So being an investor that makes sure that the projects are leaving every person, property, and community better than we found them. We're going to talk more about that. Making sure that you're keeping your tax dollars where they need to be, which is in your pocket. And then so that you can, decide where that those are going to go and make a difference in the world, making sure that the deals that you're doing are structured in such a way that your money is absolutely protected. That's super, super important. And then it all comes down to the team and the who's that know how. So those are the things that we're going to be focusing on, and understanding if you are an accredited investor, what your paths are. If you're not an accredited investor, what your paths are. So the good news is we have something for everybody, and that's what we're going to be going over.
A little bit for both, right?
Yeah.
So getting into that, this is the structure of the 3-day summit that we came up with. Day one, we're going to talk about the engine, the Titan 23, the deal flow, the execution. So what we're going to be doing is laying out what Titan 23 looks like. It's a private equity firm. Okay. And a lot of people understand private equity as, like Wall Street level stuff. What we're trying to show is that there's blue collar accredited investors that want to take their active income and invest it into private equity that, say, for example, invest back into blue collar businesses, right? I mean, I'm a general contractor, and I actually have 7 companies that are specialized within the home services trades, just based on the fact that they make money and I know what their returns are. I don't even work for them. I just operate them. I own them and let somebody else operate them, actually. And then day 2, we're going to talk about the machine. This is where more and Catherine and the 7 Streams Investment Club team come together and discuss what's going on there. And then on day 3, we've got quite a few special guests. Roman was in here just a minute ago, but Roman Rubio is going to be leading off and working through Opportunity Zone Day. That's on day 3, where that's the shield to your wealth, right? You build the wealth, you find the wealth, you build the wealth, you protect the wealth. And that's what it comes down to. So here on day 1, this was what we were supposed to do. Amor, you better be paying attention here, because we had plans on being here at 8:40. Then we are going to do this thing at 8:45 and 8:50. We're going to do the green room and do this, all that, and da 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 da. And guess what? Beelzebub had other plans. So what ended up happening is we moved into the opening up at 9 o'clock, talking about all the things that we're doing. At 10:45, we're going to take our first 10-minute break, and then we're going to wrap this thing up with like 5 minutes to 1. So this is kind of an overview. For day 1, the morning part of this is going to be, how it all began, what, the past deals look like. Catherine had over 500 flips she's going to talk about. And then we're going to get into what the AI model looks like. We'll have our first break at 10:45, like I said. And then we're going to be coming back at it with a Deal Hunter demo. And then we'll be looking at the current deals inside of our Titan 23 fund. We'll walk through some of those deal structures, and then we're going to wrap it up with some qualifying discussion and Q&A, and close it out with with the end of day coming at around 1 o'clock. We'll bridge us over to day 2, and in that we'll be talking about the income machine. Catherine, you want to get into a little bit more of that, what that's going to look like?
So this is my favorite conversation, and this is where Tracy, Amore, Deanna, like all of us are all into the 7 streams of income. So anybody interested in 7 streams of income, put it in the comments. 7 streams, 7 streams, 7 streams. If anybody's
Woohoo,
that.
Ellen.
So we're going to be going through and again, not only just talking about them, but bringing the who's that know how to the table so that you can build that for you and your family.
So tomorrow you'll see at 9:30, Kim is going to be discussing, starting off with multifamily and co-living, and moving through, till 1 o'clock again tomorrow.
Yeah, we've got so much more coming as well. So you want to make sure that you're absolutely there for that.
It's right there. No, go back.
Damn it. Okay, sorry. There we go. Okay. So we got Stuart.
Stuart Gutner.
Yep. So he's extraordinary. He's been doing multifamily since forever. Excited to have him on. Kim Russ is going to be talking about pad split and co-living. Then I'm going to be talking about impact investing. Then Deanna, who's here with us, she's going to be talking about luxury properties, which I'm super excited about. Another fellow Canadian.
Oh, whoa.
We're going to take a short little break. Then we're going to talk about the investment club. This is for our accredited and non-accredited investors. You want to absolutely make sure you're a part of that. This is another way to diversify your portfolio. Very exciting. And then how the streams work together. So I'll be talking about that. Tracy is going to be coming on talking about, again, something that's super important and dear to my heart, which is all about investing inside of funds, which is really awesome. And then Trevor's going to be coming on and talking about fix and flips, which is really exciting. I've done a few of those. And then we'll be closing it up with some Q&A, and then on to day 3. So day 3 is about it's not all about how much you can make. It's literally how much you can keep. This is really important. So Tommy and Amore are going to be talking about this. And this is one of the most important things that you need to understand. And inside of understanding and decoding opportunity zones. So this is all a part of it and how it's all wrapped together. One of the many, many reasons I love this country literally is the tax code. And so given what's happened with the Big Beautiful Bill Act and the tax code, you need to understand that only a fraction of the tax code is about how to pay taxes. And the rest of it is all about how to not legally pay them. So, and how to take that and make a difference. So I'm really excited. So we're going to be starting that day. With Tommy, and then Tommy and I'll talk about the tax problem. Roman and Tommy is going to be talking about the opportunity zones explained 2.0. This is super, super important. You want to be a part of this discussion because of opportunity 1.0 is literally sunsetting December 31st this year. Opportunity zone 2.0 starts in January, and you want to understand that goes for the next 10 years. So you guys really want to understand this. And then
We're going to go through and get everybody up to speed on the OZ Wizard book, the OZ Wizard AI, the OZ Wizard Chat GPT, and giving everyone the understanding of what that looks like. And we've got Natalie coming in to talk about affordable housing in Florida that is in these areas. We got Dr. Fernando coming in. Dr. Fernando Acosta is a business broker who's also helping people understand how to get into what are called qualified opportunity zone businesses and breaking those down. And then we're going to wrap it up by kind of giving everyone the overview of the full ecosystem, some Q&A, and closing out the day at 1 o'clock. So we're hoping that everybody is going to be able to make it all 3 days. The goal is to provide top tier, top level information. So be sure to stick around for every single day, because again, Titan 23 today, 7 streams tomorrow, OZ Wizard on Thursday. All comes down to Catherine's entire soul behind all of this, which is the legacy of Chosen Forever. And Chosen Forever is that that soul behind all the things that Catherine does, in getting, 120,000 adoptable children out of the foster care system and into homes, into families, so that we can really make an impact on the way that communities operate. I was watching this morning, on social media. There's an area in every town called the Blade. And if you don't know what the Blade is, it's basically the area where there's this area where there's just high levels of sex trafficking, high levels of drug abuse, high levels of theft and robbery and stuff. And these are all kids between 14 and 24. And so the Blade in Phoenix is between 27th Avenue and Indian School. And somebody came up with the idea of just going down there and demolishing what's there, because again, it just breeds this lifestyle. They want to demolish what's there, and they want to build on all four corners of this area. They want to build up gigantic mixed use residential, multifamily, they want to have a retail section down there. Like, they want to make it Arizona Mills Mall Part 2 in this area. And they feel like the only way they can, and then they also want to have like a drug addiction and recovery center located within the mall, right? To continue to help the people that are there in the Blade. And so watching that this morning, it was like, this isn't an opportunity zone. This is exactly what this is built for. And it's built for people that are like Uncle Jed, who has shit tons of money. And when you watch the Beverly Hillbillies, they'd be like, "Oh, Uncle Jed, you want to go and buy all this stuff?" He's like, "No, not really. I just want me to get some squirrel stew. Where's Granny?" Like, he wanted simple. He wanted basic. And if you told him that there was something that his money needed to go toward, he wanted it to go toward impact. He didn't want it to go toward, BS and stuff like that. So those are the types of investors we're looking for. The ones that want to make impact, the ones that want to put their money behind impact. We're not looking for people that want to just put money into something and make something out of it. You can go find that just about anywhere else. But here with Titan Impact Group and what Catherine's put together with the team that you see on the screen and in all of our different meetings that we have, these people are putting together stuff that changes lives, communities, and people. So I'm pleased and blessed to be about it. So
the graduation event is it says Scottsdale Car Club there, which is a hilarious picture. Love it. But again, it comes down to that at the end of the day, this is all about you engaging inside of and taking action to create your next stream of passive income. And we have multiple paths for you to do that, including drafting your very personalized wealth plan and having access to the investor club that has been put together, and then understanding your opportunity zone for moving forward inside of being able to create legacy and generational wealth for your family. So we're very excited about this, and going to be digging into all of these pieces. So
I want to make sure that we also tie in the fact that December 1st, 2nd, 3rd, and 4th in Scottsdale, we're going to be having the biggest networking investor and entrepreneur event of its kind ever done before. Catherine and I have been going to wealth building conferences and events for double decades. And what we've taken from all of those are what we want to bring into a 3-day session that's going to be absolutely amazing. So man of the hour is here.
Hey guys, sorry about that. My flight was delayed.
Welcome, Adam. Welcome.
How's it going?
He's on the move right there. So let me make sure to introduce Adam Hansen and with Catherine. These two have put together some amazing history. So I want Catherine to kind of explain to people how she got into real estate through the 500 house flips, and then how that all came to be with you and Adam.
Yeah, absolutely. So Adam, thank you for joining us. I know that you're on the road, boots on the ground, but again, this is ladies, sorry. This is what we love about all the things that we do. So Adam and I met and started working together eons ago. I think it was like 12 years ago. So I share the story about how I was running a program here called Flipping Females, and we're partnering with women, teaching them how to invest, and we flipped about 500 houses. So there was a whole team that made that happen. Adam was a significant part of that team making that happen. So on all sides of it. So Adam and I feel like grew up together.
That's a good way to put it.
Right? And learned an obscene amount. So, again, it's having a conversation with Katya this morning about how not everything, you make a plan and then it never goes by like the plan.
No, I've never had a real estate deal go according to plan. You have a guide that you follow. You have hopefully you've got reasonable partners that you work with, and then you just kind of sign up for the adventure is the way I think about it, because you never know what's going to happen, from putting deals under contract to issues with construction to issues with the tenant. There is no such thing as like a cookie cutter deal or an easy deal. They're easy because you have the experience to be able to make adjustments as needed when the inevitable comes up, which it will with every single deal. And so the fear comes in when you have never experienced those situations, or when you just, you don't know what to do. And that's where, again, having a good team behind you is very, very, very helpful, because chances are they've been through the similar situation before and they were able to successfully navigate it.
Yeah, absolutely. And here's the other thing I want you all to take for yourself. It's about extraordinary partnerships. And here's the thing, that how your partners behave when things go south is more critical than how they behave when things are going awesome. So Adam and I have been through the ringer, and we've got a whole YouTube channel on Halloween horror stories. But again, it's like why we've continued to work together over 12 years is literally because we've been through the ringer together. So one of the things, like the conditions of satisfaction I talk about when you're looking for people to work with or operate with, one of my questions is, tell me about a time that you failed and how did you get through it? Because that will tell you a huge amount about their character, their determination, persistence, perseverance, like all of it, their grit. And if they tell you they've never had a failure, run, because you don't want to be their first failure and have to be the one to work out how they sort through their, going through a failure. So I always want to know, yes, you've gone through a failure, you've got some scars and some skin knees, but how did you get through it? Because that tells me more about you and how we're going to get along than anything else. So that's a huge part. So,
well, and it also shows that they've actually gone through the process, because as we just talked about, there is no such thing as a perfect real estate deal. It's just not. So if somebody says, well, I've never had any issues, every deal I've always done has gone perfectly, that to me is a huge red flag, because it just says that they've never done a deal.
Right?
I've had no issues.
That was good.
I love
That was
it.
really good.
Yeah, so yeah, this is really great. So if anybody has had partnerships go sideways, we're here with you. We get you. And so Adam and I went on, and so we ended up forming our first hedge fund, and that was a whole interesting journey. And we did vacation rentals. So it turns out that I don't like tenants in toilets or guests in toilets, but that's my personality, right? And this is a piece of why we created the investor profile that we've created for all of you, so that you can take a personality profile. It took me 20 years to figure out what type of investor I am. So I like to be the bank and I like to rent dirt, but it only came from all of these bumps and bruises and scrapes that, I've gone through, and pretty much most of them with Adam, to discover the things that I don't like. So I really got clear on the things that I do like. So we did the vacation rentals. That was a very, very early, at the very beginning of that whole curve. That was very interesting. Again, we have a whole series of videos you can watch on the things that the insane stories around that. Adam and I I feel like I have Airbnb PTSD, but that's a whole other thing because it's not my personality, right? Like, I'm not saying don't do it. I'm saying it's just not my personality. So for you to get clear what your personality is, right? Like Adam and I did those fix and flips, we learned about all those things, what we liked, we didn't like. I love the before and after. I love the dramatic change. Like, I love all of that, right? But it's not
Yeah,
true.
and it was because of that fix and flip that's what helped us understand the hang on a second.
And this is what we do, you guys. Like, we make plans and things happen
Don't think
and
so.
we roll with it. Like, this is seeing how not smoothly this summit is going is a perfect example of how perfectly imperfect things turn out, right? Like, that's the piece I want you to get. So, Adam, what were you gonna say?
So I was going to say, like, even doing all those houses and stuff like that, like, I looked at it that I didn't necessarily enjoy the construction process on it because I always felt like I'm going to pick the wrong color or the wrong flooring or, you know what I mean? Like, so to me, that process was difficult. But what I enjoyed was seeing the change, right? Seeing where you can create the value through that process. And so that's where, that's how we're fast forward a decade now we've come up with essentially the same model, the fix and flip model in the medical world. But
Yes.
rather than like caring what color paint it is or how the property looks, we've essentially dumbed it down to where we are increasing the value through the paperwork, right? Through the commercial lease, understanding how the commercial lease works, how to make it a true triple net lease, and how to make it very attractive to REITs to want to purchase it. To where now, from my perspective, the real estate isn't all that important. It's the lease behind it, the financials behind it, and knowing how to put all of that process in place. That's the value creation. So now I love, again, taking those same principles we learned, 10, 12 years ago. It's the same concept, but it's just looking at it through a different lens where I really enjoy, which is kind of just let's create the value through doing the paperwork, not even, who cares what color paint is on the wall or what type of flooring you put down.
Right. And here's the thing. So Adam and I went on and we've done residential ground up developments, commercial ground up developments. What he's talking about is commercial triple net lease. So here's the biggest aha around what Adam's saying is when I realized that the same amount of time that we were spending on one single family home fix and flip was the same amount of time we were spending on a commercial deal, only they were way more commas over here. This was a perfect example of do the numbers tell you what to do, right? If it's the same
Catherine,
amount of
what
time,
what is medical triple net lease?
this is
What
your-
is that?
yeah. So Adam, I would love for you to explain so people understand all these terms, and that as an investor, I'll jump into that.
And then, and then I'll let you kind of maybe wrap up any questions they have as I'm getting ready to walk into this conference. But essentially, what a medical triple net lease is, what that means is you have a lot of times your doctor's office, your physical therapy office, your chiro, your veterinary clinic. A lot of those companies are actually owned by a larger company. A lot of times, they're called private equity backed. And so those private equity owned medical platforms that's where the value creation is. And so you'll have very specialized real estate that will be focused on the medical side. And then you put what's called a triple net lease in place. And all it essentially means is that you as a landlord, you have no responsibility for the real estate. You're going to have your base rent, and then any expenses associated with the real estate is going to be on the shoulders of the tenant to take care of. And a lot of these private equity companies prefer to have those types of leases because it allows them to operate the property how they want, and it allows them to be more efficient. Well, we love it too because then it guarantees the income that we're going to receive on the rent side, and it eliminates a lot of the risk that we would have of, a water main breaking or the roof leaking, or we got to remove snow or whatever it is. And so the lease structure is very, very, very important. And having, a few sentences in a lease not worded correctly, I'm telling you, it can change the value of the entire deal by millions of dollars. And so having that correct lease in place, understanding what it all means, and knowing that you're aligned with that medical provider, that's how you really create the wealth, and that's how you really create the value in the deal.
So I want you to understand. So people ask me, like, what does it mean when I like to be the bank and rent dirt? This is the perfect example. Literally, we're renting the dirt. So if the tenant is responsible for the whole building and we're responsible for the dirt, like, hello. And then being the bank, this is a version of it because, again, they're renting the dirt. So, and how we structure these. So, Adam, let's talk about particularly how we structure these with the doctors, because that's the whole being the bank part that I really love. And this fulfills on my need to leave every person, property, and community better than we found them.
Sure. So we have a couple of different ways that we can structure it, but what we really try to do is just approach it on how do we help the doctor grow? How do we help them make a greater impact with their passion, with whatever it is that they are focused on? And if you look at a typical doctor, he's going to go get his practice open, and then it's going to take him anywhere from, after he's kind of successful, it's going to take him 5 to 7 to 8 years to go get that second location open. And then maybe another 5 to 7 years to get that third location open. And so by the time he's got 3 locations open, he's well into wanting to retire stage. And so what we do, because we can come in and we can buy the building, we can set it up as the doctor needs it. And in some cases, we can even provide some of that startup capital he needs to start that new location. We can come in and act as a very, very powerful tool to allow him to grow a lot faster and a lot shorter timeline. That way, the doctor can be focused more on having that greater impact in the community that they reside.
So, as an investor, this is why the PE groups love this, because again, it's all about the who's that know how. Like inside of what Adam and Fred do, inside of helping these doctors, these practitioners, we want the doctors to stay focused on their practice, right? And rather than trying to like be distracted with become real estate investing experts, Adam and Fred are the experts that specifically know exactly how to do this. And now, as investors, be able to plug in and get the benefit of that. So,
yeah, and essentially what we do is no different than what we do is no secret. This is how Starbucks grows. Starbucks doesn't go and finance the cost of every new location. They understand the power of that commercial lease. They understand the power of their financials and the signature. And so they will simply go say, hey, we want a new location here. Here's what we think our lease is worth. And the value of that lease is what gives them the dollars to do all the construction, to do all the branding, and to get that location open. So it's no different than what, say, a Starbucks or any other company does. We just simply try to offer those same services at a smaller, smaller size. So that way the average doctor, the average business can tap into that same, ability to leverage the commercial lease to their benefit.
So, and to understand like how this works, who here, you can just put $ in the comments. Who's here heard that McDonald's is in the real estate business, not the burger making business? Anybody? Anybody heard that? Deanna heard it.
Yes.
Yep.
Yes.
Yep. And this is exactly what Adam is talking about, is that it's all about this real estate piece and how this triple net lease gets structured versus them selling 1 billion crappy burgers. So again, when you understand that, you understand, wait, so, here's the next piece of homework. Tony Robbins wrote a book called The Holy Grail of Investing. And here's what I love about it. Everybody go read it. He actually literally pulls back the curtain and interviews all these billionaires and how they made their money. Guess what? They didn't make their money by putting it into 401ks. They didn't make their money like doing all the retail investing things that, the brokers, people who are, anyway, I won't go into that. So a whole other thing, all the retail that is literally taking your money from your hard-earned money from you and wasting it. Like they invest in private equity deals, and that's exactly what we're talking about. These are private equity deals. And it's important that you have the who that knows how, and that you plug into them, and that's how they've literally made their billions. So this is one of the pieces of it, and to understand that every single billionaire that's been made literally has a portion of their portfolio in real estate. So we believe that success leaves clues. This is a clue, you guys. We're literally showing you not only like how they're doing it, but that you can do it too, and that there's a team here to help anybody who's interested or wants to participate in adding commas. So really quick, I just need to brag on Adam really quick. We closed out our last triple net lease commercial medical office deal. Let's talk about this last one really quick, Adam, the Virginia Beach that we did.
Okay.
It was a veterinary clinic.
Yeah, it was a veterinary clinic in Virginia Beach. We bought the real estate. We bought the building for 1.8 million. We put $1.5 million in tenant improvements into it. I think we raised, what did we raise, Catherine? I think we raised $700,000.
Yeah,
and then about 16 to 17 months later, we wanted to intentionally hold it for a year, and then we targeted to sell. I think we sold it for just under 6 million. And we were able to exit everybody out. And I think I don't remember the exact numbers, Catherine, but I think most of your investors got was it a 30 or 35%? Yeah.
45% ROI. Anybody put some flames in the comments if anybody's interested in like some deals like that. Adam, let's quickly shift over to the industrial space, the industrial condos, because I want people to understand that and how we're building those out as well.
Okay. Yeah, if you can see in the kind of in the landscape in the western part of the United States, every industrial type asset that is being built right now is mainly big, large warehouses for Amazon, right? You'll see a 1 million square foot facility go up. And the problem is that's great for the Amazons of the world. That's great for the massive corporations of the world, but that's not helping the smaller entrepreneurs. And it's not helping guys go from their garage to, kind of really starting their business. And Catherine and I, we both have been very passionate about wanting to make sure that we're empowering that American kind of spirit and that American dream of empowering the entrepreneur. So what we've been focused on in another project that we did is we built I think it was like a 36,000 square foot industrial building, but it was set up specifically with condos. So each condo was about 2,500 square feet, which is the perfect size for a smaller business that's just getting started. And the reason why we set it up that way again is because then as rents were and are increasingly rising, this allowed these entrepreneurs to lock in a price to be able to purchase the location. Now they get to be the landlord. Now they don't get to have the rent increased on them by 50, 60, 70%, which obviously is a huge hit to any small business to have their rent go up that quick. So those are similar projects that we're working on. Those are a little bit harder to get done just because of the cost of construction and everything else. We want to make sure that we can deliver, but we are actively out looking for sites to be able to perform and to be able to model that.
So again, incredible returns on that last deal that we did. It paid the investors 35% ROI. So if anybody's looking for more commas in their bank account, just type commas in the comments and we'll sprinkle some comma fairy dust on you. We love commas. So yes, Adam and I have done an obscene amount over the last 20 years. We have so many stories we could tell. We should probably write a few books, Adam. That would be interesting.
I hear you've written a couple,
Oh yeah, I have 8. So we got more to write. So for everybody, this is where we have the Q&A. So if anybody has any questions, this is an opportunity for you to be able to ask questions. You can put your questions in the comments. You can put them in the Q&A. The team is.
And if you want, Catherine, you can, because I'm pulling up to this conference right now, and I'm
Yep.
running late to an appointment. But any questions that anyone has, if you want to get them over to me, I know you can use AI or whatnot to kind of compile them. I would be
Right.
happily to take some time this evening in my hotel, and I'll respond to each one, so that way you can push them out to everybody tomorrow.
Love
To anybody
that.
who has any specific questions, I'll be sure to address them all.
So Adam, I appreciate you calling in from Las Vegas as you're continuing to grow and expand the business. And again, this is what it looks like. This is like boots on the ground. We make all the things work. Tommy is over here walking back and forth because we're literally closing on a few huge deals. One's a data center, an RV park. You know, we got like tens of millions of dollars literally happening as we're actually sitting here. So nobody's being rude. Everybody is literally like making it all happen for all of you. So Adam, thank you, thank you, thank you.
Thank you, Adam.
Yep, thank you
For
guys.
being
Thank you guys.
here.
So really clear, Adam, we have an app that we created for this event. So everybody's going to be able to scan their information into it, and then it'll be shared with everybody so that we can all connect with each other and continue to do further things. So Adam, I'll send that to you.
Awesome.
We're going to share it with all of you. So Amor or Laura, if somebody could put the link in the Adam, if you could grab that before you go in the chat.
Okay.
No, that's not the one. It's the other one.
Yeah, I know. So I'll send it to Adam.
Adam, we're gonna send
Okay.
it to you directly. So everybody go ahead and yeah, do that. Anybody have questions around and all Adam and I just talked about a lot. So Adam, thank you. Go have fun.
Yep.
I can't wait
Thank
to
you
catch
guys.
up and find out
We'll
what
talk to you soon.
Okay, bye-bye. So we talked about the 500 fix and flip. So if you have questions about that, we talked about the residential ground up development, the commercial ground up development, the commercial condos, the triple net lease commercial medical office space, PE groups. Like, anybody have any questions, or were Adam and I so brilliantly clear that you have no questions?
You were definitely brilliant, and you were clear. I'm wondering, for those who are with us, I know something that you and Tommy talked about at the top that for a long time I didn't understand is, what is the difference between an accredited investor
Yep, I
and
love this.
just someone who is like, hey, I want to invest? So I was wondering if you could break that down for us.
I want to do that. I will do that. I'm actually, I want to pull the whiteboard into that.
Okay,
to do
great.
that.
Let
So
me fix the camera.
we're gonna pull the whiteboard on, because it is important to understand what an accredited investor is. I did not know I was an accredited investor based on the common rules that I covered.
No, definitely. I think it's very important because I know for years I just heard the word and I never understood it. And
Right,
then
right,
when
right.
I learned what it was, I actually realized I qualified. And I was like,
Qualified,
oh.
That's usually
And
what happens.
so-
Yeah.
please tell us. And it also helps people know what pathway they can go on
Right,
to become an
right.
accredited investor as well.
So to that point, an accredited investor is somebody that and who determines what this is the SEC, the Securities Exchange Commission, and some other financial bureaus in the federal government. But basically, you have to earn $200,000 a year as a single person, or 300 as a married unit. So single, married. Okay, that's the first way. And you have to do this for 2 years, including the one we're in. So you have to be earning that level for 2 years, including the one we're in, to be an accredited investor. The other way is to get SEC certification through what's called a series license. Damn, bird. Wow, that one hurt.
The bird wants it.
He hit the window and then like went down on the ground.
Oh
And
boy.
then
Poor
he's like
bird.
walking like this a little bit.
Poor bird.
He's drunk right now.
Sorry, guys.
Series 65, 63, Series 7, all these licenses. give you the opportunity to be calling yourself an accredited investor. Another way is to be a CPA, okay, or a lawyer that deals with um, deals with securities, okay. But there's one more. There's one more that most people don't know. $1 million of assets.
Mm-hmm.
This is the one that gets everybody, because then you're like, well, wait a minute. If I sold everything, liquidated everything I own, $1 million is where I'm at. Because what I have is I have a D9. Does anybody know what a D9 is? That's a tracker. I also have an E35. I have a Ram 3500. And so when you add up all the equipment that I have about $2.2 million in equipment. And now all of a sudden I became an accredited investor, because if I liquidated all my assets that I have, right? So the other person that this falls into is somebody that owns a laundromat
Mm-hmm.
making $1 million, worth $1 million. A business that's worth $1 million. A property that's worth $1 million. Artwork that's worth $1 million. There's so many things that you can put into this. You can have crypto that's worth $1 million.
So Tina heard it as tracker, not tractor.
I was like, I love it. I love it, Tina.
It's a tractor. You should see us.
No ankle, no things on our ankles. Okay. No.
So
I love it, Tina. I love it.
the point being is that a lot of people don't understand their potential to invest in things that only are set aside for accredited investors. And so that's why we set up the Seven Streams Investor Club, is so that people that are not truly accredited investors yet can get there, right? They can build that wealth to get there, right? So the other thing they can do is work with other accredited investors and be sponsored by accredited investors. But if you're not accredited, you can still go into, and this is something that we'll go into on Wednesday a little bit.
Yeah, Deanna thinks the bird was an accredited investor who wanted in on the deals.
Boom, right? We'll get into it, but if you guys want to do a little pre-research, go to 2012 Jobs Act, JOBS. This was jumpstart our business startups. And so the 2012 Jobs Act basically created private equity for the Beverly Hillbillies.
And really clear, Tina just put in here that everyone with a 401k can actually start investing in private equity.
Yes.
Most definitely. That's
You can use your IRA, you can use a 401k. And we've got some people that we have people that talk about doing we have people that are doing the IULs.
Yeah.
Right. So we have people that are doing IULs.
And Tracy had a really important point in here. Tracy, I don't know if you wanted to just say it out loud.
Where's Tina?
Oh, are you talking about your net worth can't include your primary residence?
Correct.
Yeah.
There, did Tracy, where'd Tracy go?
Tracy's here.
There she is.
I'm here. Did you hear me?
Yeah, we can hear you.
Yeah, I was just saying you can't include your primary residence in your net worth.
No, it's got to be assets. And your primary residence is not necessarily an asset.
Asset, yes.
Right? But if you own a trust that owns that house that you live in, guess what?
You can become an asset.
You don't have a primary residence.
You don't have a primary residence. These are all the things you need to learn. That is why we are here. Yes.
Absolutely. So
IUL, because this is a really important point that you made. So can you explain to people what an IUL is?
a little bit, like I'm not the expert on it, but I know some people that are, right? And so basically an IUL, and I used to have one. I had $1 million. I took $1 million and I put that into a universal life insurance policy. Into the universal life insurance policy. I put that in there and it had more cash value than it had death benefits. So my death benefits were really low, my cash benefits were really high. What I was able to do was I was able to borrow 90% of my $1 million after 6 months. This $1 million in this life insurance policy was earning on average about 6% a year, a year on the policy. So with it earning 6% like that, that was a good deal. When I borrowed 90%, I took out $900,000, right? And what I did with that was I reinvested that over into stuff that was making about 20%, the stuff that Catherine and Adam were just talking about. When I reinvested it that way, the whole time, this 1 million is still making 6%, but because I borrowed 900,000, okay. What I did was I ended up having to pay back that 900K at 5%. Guess where that 5% went? And it went back in my IUL.
Yeah.
So I was paying myself interest, right? So the whole time my millions in there making 6%, I was paying back 5% on top of that, right? And then arbitraging it because I had 20% of it coming back to me in my investments. So technically, making 20% on the investment of that, 6% here, and then 5% there. I mean, I'm not a CPA, but that's a lot more interest than what I started out with if I went to a bank.
Well, like Tracy said, becoming the bank.
You become the bank, right?
Yes.
And so this to me is just how my brain understands it. There's smarter people out there that can get it way, way more detailed than me, but this is the kindergarten version my brain understands.
So I love that. So Tracy's actually one of those people who can take a deeper dive and educate you further on that. Again, please make sure that you're here, I'm gonna put it in here again.
Your
So
information.
go ahead and, click on this link, fill out your information, and it gets you connected to all the people here and all the fun things that they do. Make sure you fill out your profile fully so people know who you are. And you have to click the little button that says yes, share your contact info. Otherwise, nothing gets shared. People can't. And if you're not here to network, I'm not really sure. Anyway, that's a whole other thing. Okay, so it is
It is 10:10, right? And so
right on time
great. You guys are doing great. This is great.
for all the fun
You're
things.
gonna need pom-poms tomorrow, some more.
Don't you worry. Don't you worry.
If you're gonna be a cheerleader, I want pom-poms, all right? I
We
want
got
pom.
that there for you. It's so great that we just talked about all of this and accredited investors and really being able to understand that so we can really learn more about the Titan 23 model. So I'm really excited to hear more from Tommy for him to be able to share more about that. And this amazing, like Catherine has had it for many years, and just how all of the things that are expanding for this year. So we're really excited to have Tommy tell us a little bit more about it.
Absolutely. These are gonna be the ones that we kind of pull in, so put those back on the screen. And then go to your notebook LM and do the sources, studio, and do integrated well.
And while Tommy's waiting, could anyone like on a call or in the chat, like what's one takeaway you have right now from everything you've learned? What is something that you can take and either I want to read one of the books, I want to make sure I'm connected in a network so I can talk to Tracy about how to be the bank. What's one of your takeaways right now, because we want to make sure that you leave this 3 days where you're really clear on your next steps. So would love to hear as we're getting ready to share more, like what's one of your takeaways? I love that. I love that, Deanna. Like there's always so much to learn from other people's experiences. That's a great. Stay curious. Um Oh, yes, putting your home into a trust. Yes, That was great, great, great.
The
Secrets.
number
and-
one thing that I learned today is that you can have a vision, you can have a plan, but you have to be flexible in the plan
Yeah.
and how to get there. Because a lot of people I feel like are so tuned in to following these steps and making sure it happens exactly the way they initially envisioned it. And then they stay stuck and they stay frustrated. So being open-minded and flexible and taking it one step at a time, I think that's huge. And I learned that especially from the segment with Catherine and Adam, what they were talking about. So
Yeah,
that's my
I love
biggest
that.
takeaway as of now.
Thanks, Katya. That's amazing. Sarah, you said the sky's the limit when you break the barriers. That's awesome. Nicole, there are so many ways to make money. There are so many opportunities around us. And so that is such a great point. Victoria, I love yours. It takes the same effort to acquire a multi-unit as it does to purchase larger commercial properties. That's really great. Really, really great. Oh, I love this. So much learning. And hey, we're only an hour in. Excited. So let's jump in, Tommy.
Yeah, so now we're going to talk about Titan 23. So Titan 23 is a private equity firm. It's a private equity fund started by Catherine in 2023 as a general real estate fund. And it was started through a program called Avestor. Avestor is what they would call a transfer agent, acts as a transfer agent. So, and we're going to kind of get into a little bit of that and describing that. So, the integrated wealth strategy system. Hold on, I got to get my clicker here. Put the clicker there so I can hit the clicker.
You can just do your finger.
You want it that way? Okay. So, basically, for the purposes of this meeting, we're not going to talk about investing into Titan 23. We're going to talk about what it is to be with Titan 23. How our real world application, our step-by-step framework, and our full strategic integration helps people make money, including us. Like, that's no hidden secret. If we as sponsors are not making money, like, what are we investing for? Right. And so what we do is we put our own skin in the game with this. And that's what helps investors, understand how valuable we see them as, resources. So, over the 3 days, we cover this with Titan 23 being an engine, the machine. The engine is actually the 7 streams, and OZ is the wealth shield. OZ and tax structure is important. So some of the things we're going to go into are about the deal structure, why deal structure, how you put it together, etc., leads to bigger opportunities and better performing opportunities. And then that's what private equity funds have been doing for years. Like, I've got a group of doctors who put together, they because again, what does a doctor have to write off? Rubber gloves, right? Like, how many rubber gloves can you buy to write stuff off? So that's why they put together real estate investment teams to buy real estate, is so they have stuff to write off. And that's a strategy. That's the strategy they use, right? To do that. We use a strategy of case study breakdowns in order to understand what we're getting into. And then the third part of that is the investor mindset, right? Where we're pulling together powerful professional deal making abilities, like from people like Adam, people like Roman, right? That come together with us and help us achieve this. They're like the special teams or the sideline coaches that help us while we're on the field doing it.
And
Right?
inside of the investor mindset, another piece of homework is for you to read the book Cash Flow Quadrant, because it talks about the different mindset to be an investor.
Yeah. It's important to understand that stuff. So, the goal today is to kind of put together what our deliverables are, and what those are is how we've built trust in people. Catherine's been doing deals with people for over a decade, right? And then showing you how those deals come together, how we evaluate the numbers behind those, and then also why it's important to maintain a mindset in this, right? So, that's what our goal is today, to talk and through talking about Titan 23. So, no, I don't think this is the slideshow. It's nope. Nope, nope. Next one.
Is it the same PowerPoint?
Go into share your screen again, please.
Sorry, guys, technical difficulties.
Go to the studio. It says studio right there. The Titan 23 is, yeah, that one. The other one needed to be deleted. That was the problem. Now do that one. Turning dirt into dollars. So now that we've kind of broken into that a little bit, this is where it really gets into it. So Titan 23 is set up as a 506c offering. Okay. Again, this is not about solicitation. And all we're doing is presenting official documentation for people to review. It's not a solicitation for investing. So what we are doing is we're giving you the opportunity to understand and see all the ways that we put things together through our statements, how we discover risk mitigation, and how we're able to not make promises. Just we talk about what our past performance was based on and how we got to this point today. You know, I'm not telling you that you need to get on our boat, but I'm telling you how we sailed across the ocean.
If you're
So,
looking to invest in private equity, these are the things you need to be paying attention to.
correct. If it ain't with us, it's for somebody else because
Yeah.
this is the traditional model right here. Disconnected operators, right? And so there can be a breakdown in underwriting, there can be a breakdown in due diligence. There's reactive management, which means that like when something happens, we throw money at it instead of putting money forward into something so that we're mitigating risk. We're waiting to throw money at it after the fact. And then there's also investor friction where sometimes investors feel like they're in the dark, you know. With our strategy, what we're looking to do is first of all, we don't put into or buy into just one single asset.
So let me talk about this for a sec, because I feel really passionate about this.
Mhm.
So given my own experience, again, this is about making not more better decisions, but less stupid decisions. And one of the stupidest decisions that, you know, my late husband and I had made was we literally were buying the same asset class and multiple of them. When that asset class literally was obliterated in 2009, we lost everything. So yes, we may have been diversified into multiple assets, but it was the same asset class. And so this is a really important thing to understand is you want to be diversified in those 7 streams of passive income into different asset classes, which is why over the next 3 days, you're going to hear from experts in all the different asset classes and the who's that know how. You don't have to be an expert in all of them, but they do. And lean in so that you understand, obviously before you invest, but understand that it's your responsibility to make sure your portfolio is diversified into the different asset classes. And so that's why we're bringing all this together this way.
Right. And again, to Catherine's point is that what we've been able to do is integrate technology into resolving a lot of the issues that come from the traditional model.
Yeah.
Right. So going on to the 3 pillars of a complete wealth system, you know, you have to have the investing, right? And the investing is what you do that turns into income. A lot of that, like you have to invest in a passive asset in order for it to produce income. You can't just go out and be like, okay, I invested in the stock market. Where's my paycheck? Right? You don't do that. So, one of the things is like my gurus are currently in the middle of shifting. One of my gurus is Pace Morby. I follow Pace Morby like a dog, but the reason why I followed him and not joined him was because he didn't teach what I knew, and he didn't teach to what I was doing. And what I was doing was this right here. I was doing commercial, I was doing RV parks, I was doing industrial parks. Pace Morby's model, go out and trick everybody into a sub 2. Well, okay, that only works until that dries up. And that's where Pace is at. Go watch his videos. I'm not saying nothing that the guy isn't already telling people. And that's part of the diversification right there. He's stuck. He's stuck with 700 houses or some crap. Good luck, bro. He's got a couple mobile home parks. He's got some RV parks, but he's growing into that. I was already there 5 years ago. And I got the proof of that when I started Buckeye OZ Fund. Grant Cardone, same thing. Like he's been doing multifamily so long, like that was his mindset, was like the more doors, the more better. Right. And now you watch his shows and he's out doing luxury fix and flips. He's out doing car dealerships. He's trying to do all this stuff. He actually trying to go out and get his Series 65. Why would a guy that has $1 billion want to go out and get his Series 65? Can you imagine? Well, it just tells me that he wants to diversify. He wants to quit doing the thing that made him rich and go do something else because he's scared. Once that balloon pops, baby, there ain't nothing but the ground coming up fast. Right. So and that's where we get into the optimization. We cover opportunity zone strategy. It's not just a tax plan, it's a wealth building plan with a tax code built into it. So
So most investors buy asset. We Titan 23, we actually engineer them. So again, through focusing on the overlooked and the misunderstood asset classes. Again, this is why we started out, with Adam talking about, what him and I have done in the past. And some of the most overlooked and understood really is structuring the triple net lease. The triple net lease commercial medical office spaces, the small bay industrial, and we're going to be talking more and more about all of these because most people have heard multifamily, like that's the most talked about, one that's been out there and marketed forever. Most people know fix and flips thanks to HGTV. So these are like the things, but we actually dig further down into the other deals. And me personally, I found there's, bigger returns on those. There's more work that goes into it, but the benefit on the back end is really incredible. And so focusing on collapsing timelines through operational superiority. So what does that mean? We use a lot of AI to be able to do this and to be able to collapse timelines. And yes, we're going to be showing you, and more importantly, we're going to be giving you the tools. So you want to make sure that you are you're here for all of that to get those tools and be able to do this for yourselves. And then combining strategic partnerships with high touch expertise. So this is the who's that know how. So inside of like anybody that knows my story, I created 13 streams of passive income, and that came right before my husband tragically passed away in 2018, and having those passive streams of income because I was plugged into all the different partnerships. It wasn't me that created 13 different companies. It was me creating these partnerships with 13 different people, having those passive streams of income. That's what let me take a year off and grieve with my twins. So again, this is part of the why 7 streams of passive income is to help mitigate against the 5 Ds: death, divorce, diagnosis, downsized, and being dumped. And so having these strategic partnerships is really, really critical to all of you. I hope you're connecting the dots with this. So you want to talk about this?
well, it's the 4 Ps, right?
Yeah.
The 4 Ps, the performance flywheel. You got to have a plan. You got to have people, you got to have processes, and you got to have platform, right? And so we're going to go into that a little bit about how the performance of this creates the impact wealth that we're after, right? So one of the things we do is we target value add properties, for example, like getting dirt and converting it into valuable property. How do we do that? We do that through people. We have relationships with people at the city and government levels that can help us get entitlement work done, get rezoning done, get easements put in, right? And so the process of that is what kind of continues to help things move through. Easier is when we're able to, when we find these deals and we do the work and due diligence on them. Katya can attest to this, how important it was for one of her deals. She had a multi-million-dollar deal she was sitting on that would have probably like ruined her forever had it actually gone through. But she was able to use AI and a tool that we use internally to discover that this property had more issues than what they were leading on to believe. right? And so through that process of due diligence, we were able to save our investors $10 million instead of costing them $10 million.
So no matter who you're working with or who you're investing with, you want to be making sure you have all these components in your process of investing. And that's why we're sharing all of this.
And talking about the platform is important because that platform is really where it begins. So, you know, the foundation for us is the data. We use Landshark. And Landshark is a group of people in real estate using AI to get better data and do the small steps that we need to get that information over to the hands that understand it, right? And so Landshark is using Deal Hunter and free estimates and due diligence processes and doing even deep dives on individuals like background checks and stuff like that. So feeding that into the AI systems, we're able to end up with a lot of opportunities in doing predictive analysis and systems. Centralized deal tracking and underwriting assistance comes from our AI, but it's quicker computation. It's faster problem solving. It's actually problem identifying prior to, right? And that's where we're able to go over. We've worked with a company called Avestor to provide a good space for the investor to come in at and be able to operate and have this participation that almost seems kind of like what it was when Robinhood came out and there was this flood of people over to the stock market that had never played in the stock market before. And why? Because they had a platform that made it easier for them to do it from. And that's what we feel like Titan 23 and Avestor have been able to do.
And understanding, again, this is a part of do the numbers tell you what to do. By using AI and the tools that we use and we're going to give to you to be able to use, this is where we've collapsed timelines. What used to take Adam and I like 3 weeks to months to do underwriting on deals literally is done in minutes, and the verification of the entire process. So again, this isn't about AI, isn't about getting rid of people. It's about taking the mundane tasks that we have to do as people, having AI handle that so we can do the higher level thinking of working on our business instead of in our business. So
and we're going to actually be doing a demonstration a little bit about Deal Hunter and
Right.
how that works. So getting into that a little bit. So the reality of AI in real estate is that AI is analysis. It does not eliminate risk. Like it doesn't make risk go away. What it does is make risk easier to understand. And so, and some of the ways that we do that is through, for example, like construction cost modeling. We can look at what happens when we have a supply chain issue. We can also find a way to mitigate that and where we can make massive changes. The other thing is risk pattern recognition. Like we can take, for example, we've taken the financials from a project and ran it through and found that there was nefarious like use of funds.
yeah.
Right. And they're using the funds inappropriately. And then market trend analysis. One of the things that our Deal Hunter does is actually does a full like feasibility study, something that would have cost me $20,000 to create or pay for. I've gotten this to do it for me in like 30 minutes.
Yeah.
That's pretty amazing. So AI as a tool helps put all these things together. So you can see here, this is what AI thinks Catherine and Tommy look like.
Look at this picture.
All right.
That's what
Um,
it look like.
The you know what Titan 23 is. Titan 23, Catherine's been an operator for 2 decades. So for her ability to see other good operators is comes from that experience of doing it for that long. Myself, I've been in development and doing operations for over 30 years. Everything from working in emergency rooms for a decade to building 3.5 million square foot of retail space in Central Florida. I've been a part of a lot of different aspects from business development to ground up construction. So combining the two forces like that has been really what we feel is big about putting together Titan 23 is because we can now provide a product, a service, and a platform for people. So it's important to know what we're trying to do.
So turning dirt into dollars. Again, I love to be the bank and I love to rent dirt. So this is some of my favorite things to do. So the potential of raw dirt and being able to see it again comes from being able to use our AI model and again tools that we're going to give to you to be able to analyze all the different opportunities that are necessary, not just the things that we're like, oh, this is a good idea, but what does the actual market area need? What would serve that community better than anything? What would serve our investors? What would serve like everybody involved to have it be win-win, right? And again, this is again, I want you to understand there's lots of different ways to actually make money investing. And first of all, understanding where we are at in the market cyclically, because markets are cyclical, and also understanding that in all the different phases of an actual development where the money is actually made, right? The money is made on the buy, not the sell. Well, when you actually start with raw dirt and then move it through the entitlement phase, and then from entitlement and repositioning, and that's where the rezoning happens. All of that happens. You got to work with the city, the state, the county, all of that. Is it complicated? Yes. But when you have the who's that know how, that is actually where a significant amount of profit is actually made on any single deal, is literally between phases 1 and phase 2. And then moving to phase 3 is where the actual physical development happens, right? It's where you ground up, we start building things, seeing it come out of the ground, so to speak. And then that moves from once it's completely built, now it gets to be occupied, and that's where the operation happens and the ongoing passive income happens. So as an investor, you have an opportunity to first understand which stage the project is in, and you have the opportunity typically to be able to invest in each individual stage as they go through, right? As one stage completes, the next stage begins, which is a whole separate fund, and so on and so on. So again, I love this stuff. This is where I seriously nerd out. It's so fun for me.
Yeah, you can exit at any point from any one of those positions.
Right.
And this is kind of where we're executing deals. We've got deals out in Arizona, we've got deals in Illinois, we've got deals in Virginia, we got deals in Florida, we got deals in California, we've got deals in Texas, we got some deals in Oklahoma. But this is just kind of an overview of how Titan 23 is able to go across the country to make these changes, and mostly because what we're trying to do, and we'll get into this more on day 3, is we're trying to create those shovel-ready projects for the opportunity zone developers to come in and take over phase 3 and phase 4. What Titan 23 is trying to do is take in phase 1 and phase 2 and create the opportunity ecosystem and the environment for phase 3 and phase 4. Go ahead.
Again, this is where a significant amount of money is made, is between phases 1 and phase 2. We call that a clue, everyone. Okay.
So what we're looking at, for example, right here is we're looking at power in the AI economy. This is our deal in Virginia. It's called the Virginia Data Center. We've got an actual deal room on it, and if you wanted to kind of spin over to the deal room real quick, we can kind of show people what that looks like.
Okay, so talk about it while I
Absolutely.
find it.
So what we got is what's called it's called zombie power. So sometime between the 1990s and 2000s, a lot of manufacturing jobs left the United States due to what was called the NAFTA, North American Fair Trade Agreement. And NAFTA created jobs in Mexico and Canada for manufacturing that were otherwise doing perfectly fine here since the 1940s. So some of the infrastructure that was left behind when those manufacturing jobs moved to Mexico or Canada was, for example, say a General Motors plant where they used to manufacture the body parts for Buicks and Oldsmobiles and Cadillacs. That manufacturing plant went basically ghost town after NAFTA. That building has enough power and enough space and enough floor strength to hold a data center. And so it's been sitting dormant since the late 1900s. And a lot of people are like, oh, well, yeah. So right before 2000, a lot of those places kind of went ghost town. And we're out looking for those and purchasing those and getting those turned on and we get what we call to become AI infrastructure. And so, did you find the Avestor deal room?
I'm trying to find it. I'm logged in as you. That's the challenge.
Okay.
So we're gonna have to circle back. I can't find it.
So we had it was a deal room that we made. You're logged in as me over there. I'm logged in as you over here. Or I'm on this one. I think you're on that one.
I'm logged in as you in both computers.
Oh,
We'll circle back and I'll be able to share it after the break. We've got. Yeah, let's.
you can't go to Avestor and look at the deal room.
I can't get in because everything's saved in my login.
I thought it was public. Let's go back to the presentation.
So here's where we were. So I'll be able to share the link with you guys during the break. I can find it and send it to you.
Can you grab your phone and just look for it in your phone and send it to yourself? I'll keep talking. The hand me the mouse too, please. So here you can see this was another asset spotlight that we're putting together. We've got Amor and I are working with some groups out of Chicago that are going to be looking to have uh, uh, group homes developed so that they can have some sober living houses, some halfway houses, transition homes after people leave incarceration. These folks are going to need a place to stay. There's nonprofit organizations out there that want to provide them with a place to stay. The issue is the nonprofit cannot buy the asset. Who can buy the asset? A private equity fund. And so that's what we're doing with Titan 23. That's one of the things that we're doing. Another thing that we're doing is got the Illinois industrial buildings. In Illinois, we've got the ability to build out AI integration, AI infrastructure, and put together a lot of things that are not available in the Midwest right now. You hear a lot of pushback about these AI um, um, buildings and building out data centers. But the issue is, I think a lot of that comes with the missing know-how and the missing knowledge of what they're talking about. I mean, if you're sitting on your phone right now watching this, you're using AI to do it, or you're using data centers to do it. The data centers are what we're using currently to operate all of the things that are data, your email servers, the cloud, and so forth and so on. So um, the things that we're gonna go into more about. We've got some different deal structures that we have presentations for, but with the technical difficulties, we're just gonna skip them. The uh, the uh, part of building your income streams through passive income is also making sure you do it with a tax strategy that makes sense, that helps you build and expand, and gives you the ability to um, uh, plan for the future and build generational wealth for your family. So within that, here's where we kind of break things down. So we use data-driven analysis from AI. We do a rigorous amount of due diligence within a team of professionals. We spread out our assets, our resources across a variety of assets, from RV parks to triple net medical offices to industrial flex spaces to data centers. And so by doing that, that lowers the amount of risk, because again, if one thing fails, we've got 4 or 5 others that back it up. I'm not done on that one. Hold on. Are you able to find it on your phone?
No. I'm still looking.
Can you just log into your Avestor account from your phone?
No, it's saved because it's through my fingerprint.
How is anybody supposed to be able to invest into it if they can't find it on the internet? Mm,
Can you go to?
we're gonna have to go on a break. This is 10:45 break. So let's take our 10:45 break, reset our computers so that we can get the proper presentations up for people, because we're wasting money, time, and people's energy if we're not able to show them what we're doing. So I want to take the break now, reset, and then get back online and show people what we're doing.
Okay, we'll take a 10-minute break and come back together. And technology is going to be our friend. And if you would like to upgrade so that you are in the room with us so you can ask your questions directly, the link has just been dropped for you to register. Thank you so much. Hey, Felicia, glad you're learning a lot. See you guys back in 10 minutes.
No. The problem is if we.
Can we mute the mics?
Have the investors see, not that we see. That's the problem. Because if I log in, you see all the back end stuff. And he doesn't
Catherine,
understand.
we can hear you.
Yeah, you're still, something's not. I will be back in just a couple of minutes.
Okay, we are coming back online. We got all the technical things figured out. Thank you, everybody, for your patience. Hopefully, everybody took a pee while they were away.
I don't know if you took a break though. That's the only thing.
Oh no, I did. I ran
Okay,
the
great.
little ladies.
Perfect. All right, I'm excited. then.
I got myself. Oh, why is
So
this-
yeah, got it. We are excited. Technology is our friend now. Okay.
Apparently, this is dead.
All righty.
Okay. Dead. 2 hours is the limit.
Your microphone's dead.
Yeah, it's dead.
No.
We can hear you though. You sound good.
It's on right now.
Okay. Okay. What would you like to see? Do you want to see the data center?
So yeah, let's go back to our presentation, the data center and stuff, and take a look at this stuff real quick. Did we lose people during the break?
No, we're all back with bells on, ready to hear and see.
That is the good news.
I have people who texted me during the break. We got a couple of people who signed up for calls during the break. So people were using their time wisely.
Nice.
All right, so let's see. All right, so let's go back to the data center. Real quick, because there's 4 properties that we're going to show you guys that Titan 23 is investing into. Volume is very low. Let's see. How's that? You hear me good now? Is that good?
Yes, yes.
Okay. So back over here, we talked a little bit about the deals in Chicago and Illinois. We went back, talked a little bit about the data center. That's back a couple slides.
You want me to go back or
Yeah,
forward?
back to the data center. Data center. Okay. So we were talking about this asset in Virginia. And so this is our first flagship fund for Titan 23 in 2026. And so are you able to show that? And so do we have a deal like a deal room for this? Okay, so here's our deal room. This is the Titan 23 data center. You can see some of the pictures here. We also have a presentation. This is kind of what we were talking about doing, was taking the land and building out the logistics center in the back. So do we have a pitch deck for this in here? Yeah? No?
You have to be logged in as an accredited investor to see the pitch deck.
Got it. Right there, it says investment presentation. You'll be able to see that if you log in and come through and see the stuff that we put together. For example, on this one, it's got some really tall numbers. We're looking at a 55 to 60 percent IRR on this because of the way that we structured it, in that we plan on, you know, selling it in 3 years as a fully operational 50 megawatt facility. And if you don't know, they're currently selling these buildings at 2 megawatts, $2 million per megawatt. So if you do the math on a 50 megawatt facility, it becomes $100 million property, right? So that's going to be a 10x on their money. So scrolling through the rest of this really quickly, you can see that we've done a lot of optimization of our information. We've got, just click through it and we can just kind of show like a 6-month plan. We got a lot of stuff going on here. I wanna spend like a second or two explaining each slide, so people can understand that we build out our slides for understanding and getting a clear picture of what we're trying to accomplish. So we have like for this one, a 3-phase value creation timeline, taking it from acquisition into repositioning and into the I can't see because we have people in there, into the exit. So we do that by, you know, bringing in investor capital directly into Titan 23, and then Titan 23 invests into the asset entity. A lower tier entity is what it's called. So we do that like this. We have a $10 million fund, and we have $5 million of senior debt on it. And so you can see here how we strategized it was that we have the purchase price of 4.5, the site prep and building, the entitlements, the closing costs and the legal fees, the third-party development fees, the working capital reserve, and then the contingency reserve, all brought down into $15 million. So the way we set this up is using that $15 million to what we do is we invite people to come in through one of our class A3, class A2, or class A1 investment positions. So if you're investing under $1 million, you're going to be getting a 0% bonus, basically meaning that it's just cash for cash. And we're going to give a target return of 42 to 48% proposed. Now, these are again just proposals. For class A, A2, it's a preferred position where individual investors can invest between $1 million and $5 million. What we're going to do is we're going to give them a 10% bonus, meaning that for every dollar they spend, we're going to give them 10% back on their investment, meaning that their IRR is going to go up, because when they sell out, instead of having, say they invested $5 million, say they invested $4 million, they're going to end up with $4,400,000 in investments at that point, right? And so the same thing for the 20%. Anything above $5 million, they're going to do a 20% bonus on that. So the way we structure these up, you know, with the returns and the return on capital and the promote, where, you know, we explain all these things. We very transparent about all of it. So, and again, explaining it in ways multiple times so people understand it. Some of the other things, I might need the mouse, but I can't see it and drive it from over here. So the fee transparency, some of the things that are concerned about, investors are concerned about, are explained here. We've got risk factors and mitigation that's been put together, so that people understand, you know, like for example, the infrastructure and power risk. Some people are concerned about the 50 megawatts. We explained that the 50 megawatt actually, even if it's not achieved, we have the subdivision of the property in the back that we're going to be developing 23 acres on. So we cover all of this in the data room, explaining step by step what we're trying to do so that our investors feel safe. And so every one of our deals are going to look like this. All right. So this is in the deal room. If you want to learn more about the data center, you can go in there and check that out. But during the live event in December, we're going to be showcasing all of the other ones as well. We've got 4 more that we've pulled up that we can show real quick, and then we'll finish our slideshow. No, the other slides that we had. Bear with us. So we got the So these are a couple other ones that we've got. This is the event venue that we're going to be doing out in Arizona called the Dallas Bowl Saloon. And with this one, we're just going to scroll through it real quick and kind of just show you again. It's Arizona's got a big nightclub scene, and the Western theme is huge out here. So what we're doing is we're going to build this gigantic bar out here, because one of the big things that they have out here is that you cannot have a dance floor greater than 10% of the entire bar area. So if you have a 2,000 or 4,000 square foot bar, your dance floor is literally the size of a closet. So it makes it different. They've actually changed the way you can dance out here. It's called the Arizona two-step. Everywhere else in the world, it's called the two-step. And in Arizona, called the Arizona two-step, because you got to dance like you're in a hula hoop. So some of the other components to this are built into this slide deck, kind of explaining all the things to it that, we're trying to do. We're going to have, bull riding arena. We're going to have dance floor. We're going to have event stage. And part of what we do with our due diligence is it shows market analysis. And we pull data for market analysis from populations to industry understandings. So we're getting all of that information. Can I just tap you or something? Because you're not seeing when I'm trying to advance. Can I tap your foot? So this is a map of the areas and what we're proposing. The spotlight of it is out there. So the cost to build is around $6.7 million for this 3-story building. And so we're going to break this down into 2 segments. There'll be a build segment and a land acquisition segment. Some of the case studies of new businesses around the Buckeye area show that these 3 businesses, 2 of which are national chains, one's a mom and pop there, and you can kind of see that middle one right there is a coffee stand, and they got a horse going to get coffee. Right? So what we're planning to do is get this building set up, staged, ready for an OZ developer to come in. So we would be doing the ground up and getting everything structured and then turning it over to OZ development. We can go through all the financial and balance sheets really fast using our AI system, which helps us understand what our IRR is going to be and how much money is going to be, made for the investors. So this plan's been around for a little while, but we're going to be getting this one out of the ground. The next one is our RV park, the Outback RV park. The deal with this, again, not a lot of pretty slides here, but just detailed information. And so if you just kind of scroll through this a little slow, I'm looking for some specifics on the capital stack. Go ahead and go down. So We've already got 3 million wrapped up into the deal, and our construction needs are about 10 million. So we're currently raising $10 million for this one. We've got it to where we're going to be building the houses. And in order to do that, we've got to get a loan for the houses and a loan for the development out there. So we decided we're going to raise equity for the houses and get a loan for the construction. So you can see here on this presentation, it just very detailed about the prices of things and what things are going to cost. We're able to put this into our docs and present this in ways. Again, some people like to look at pictures, some people just want to see the raw data. And so we're able to do that through AI. We're able to present it in any way possible for our investors to understand. So this one here kind of explains how what we plan to do is exit out to a opportunity zone. Again, here's the opportunity zone thing. We're looking at a post-market stabilization of about $26 million for the whole place. And what we'll be doing is we'll be setting it up to either sell it or refinance it in order to exit our investors. So going through here, you'll see that like the Outback Tiny Homes LLC, it's a fund that we're actually starting, and we'll be in the deal room soon. We're getting through our due diligence and our getting our disclosure docs wrapped up on that as we speak. So the next slide is one of the other investments that we're getting into. This is a fund-to-fund structure where we're going to be investing into blue-collar businesses, and you can like just kind of skip on over to the metrics side of it real fast. You can see that what they're looking at doing investment wise is they're going to be doing right here. You can see here that their top of line shows that they have the ability to buy blue collar businesses and increase their worth by putting in proper systems. They show here their target markets, and this is Valorum Capital. It's another PE firm. This is how PE firms work together. So the idea is that they get the businesses, they scale them, and then put them back. They become cash flowing. So these are several of their projects that they're doing currently. So they go into an acquisition plan, they go through a company overview, and then they come back with deals. So met Charles and a few of the people over there at Valorum Capital, and they're really good guys. Jordan Lovejoy is actually in charge of investor relations, and that's who we've been working with mostly. So but again, this was actually one of the successes they had was Alpha X. Alpha X put together a significant amount of work in 2015 till 2025, and they've been on the grow since then. So a really amazing company. So, and Valorum uses that as their flagship. So that's why that guy's on the board there. But this is not only are they somebody we can invest with, but they're somebody that we can work to spotlight with. So Valorum Capital is an amazing company, and one that we plan on putting together, as part of our fund. So you can see here that we talked about the tiny house community, talked about, actually, if you back up, that slide right there shows about the Scottsdale custom homes. Like, do you want to talk about Chris and what that's looking like right now?
So again, this is another understanding the market and what's actually happening. So here in Scottsdale, there is significant growth happening in the Phoenix Valley. So one of the things that the AI that we're going to give you access to will literally be able to help do market analysis on different areas. And Phoenix happens to be growing significantly because of all the major corporations that are moving here. And so the job growth is insane, which means that real estate just continues to go up and the demand. So the Cactus Corridor here in Scottsdale is a really important model to understand. And so here's what's really interesting is Tommy actually talks about this. So can you talk about that for these homes that are 50 years old, the cost benefit to literally scraping them and starting new versus
Yeah,
going in
because
and doing a
they're just not making new dirt, right? Dirt's not being reproduced on a high level. And so the only way to do it is to repurpose the dirt. And right now they have houses that were built in the 1970s and 80s that even if you put money into them, they're never going to be worth what the new houses are selling for. Currently, right now, you can go buy a 1 acre, a 3 bed, 2 bath home on 1 acre for about $400 a square foot. That comes out to about $1.2 million, maybe 1.5. If you have a seller that, is a little bit stiff. But you're buying the property for 1.5, you're scraping the house off the ground, you're just tearing down the old house, and you're adding $200,000 to $300,000 in value to the property by knocking down the old house. So a 50-year-old house getting knocked down adds $200,000 to the value of the property. You buy it for 1.5. After you demolish it, you can literally sell it for 1.7 as clean dirt. You hear that? Clean dirt. So, Katya actually was going around last night with us looking at these houses. We did some driving for dollars, and she was amazed that she called them condos. But what they are, they're just massive houses on these 1 acre lots. They're building 7,000, 8,000 square foot homes, and they're selling them for $1,200 a square foot. So when you do the math on that, if it's an 8,000 square foot house with say $1,200 a square foot finish, you're looking at a $9.6 million paycheck, and you can build that house for right around 4 million. So it's kind of crazy, but
So these are some of the things that we're going to be doing, and Deanna, I know, is going to be coming in and talking about these luxury home builds. So you want to understand the market and understand what the demand is inside of these. So we're going to be digging deeper into all this. It's very cool. The numbers are amazing. Let's just say that.
yeah, you can see how it's easy to try and achieve 40% returns, because that is what we shoot for.
Yeah.
Right. So, but shifting over, we're going to, for days, the next couple days, day 2 tomorrow, we're going to talk more about active income and how it filters into these streams of multiple streams of income, investing into ground up opportunities, investing into RV parks that are up and running, investing into data centers, investing into custom home builds. Like a custom home build takes about 18 months. So you couldn't get a return in 18 months from the stock market the way that we're projecting.
So optimizing capital, again, it's about creating the multiple streams of passive income, but then turning around and how do you protect and not have to pay taxes legally on what you're actually building. And we're going to roll out all of that and show you more tax strategies. But again, of course, we are not experts or advisors in this particular realm. You need to talk to your professional team about that for your particular situation. So this is educational purposes only.
Right. And again, opportunity zones are what we're going to discuss on day 3.
Mhm.
So from that, we kind of come back to this slide again where we vet our operators. We have phase development. We have a compliance system in place, data-driven analysis. We do an extensive amount of due diligence to make sure that all of our assets that we're diversified into are safe, as safe as we can make them. So spreading the exposure across multiple asset classes can be done within Titan 23 because of the way that it's set up. So, the way it's set up, you can see here that for, the fact that the traditional way things are done, versus the way that Titan 23 does them is leaps and bounds. It's why we're able to offer more than normal proposed returns. And again, these are proposed based on the numbers that we ran. We can rerun the numbers and make them lower by adding more stuff to the asset, but because of how much time we've been able to cut off of our due diligence and the work we put into this stuff, we're able to give back more to our investors.
So, like everything, that we have a full ecosystem, and understanding this is all about, education, understanding that there's we're creating a clear way for people to be able to view and see all these, but more importantly, one of the ways that we do this is we actually do it, and it's not in here, but 9 a.m. every morning. We have a live deal room that we do every morning. So your next piece of homework is to go to landsharkmastermind.com/webinar, and you literally can join us every morning at 9 a.m. You can join us live or via Zoom. And we actually are going through all of these deals for you to be able to see them. And again, here's what's really cool about it is you have to understand that inside of analyzing deals as an investor, we literally analyze thousands of deals, which get you down to maybe 100, which again, we make offers, like we go through the entire process. So you can see all of this and really get really good at reviewing these assets as an investor. This is a really important piece for you to understand and get really good at as an investor. And again, we train you on all of that every single morning. So impact wealth is again, this is everything that we're about. I believe that we can do good and do well at the same time. And if we can, we must. So my whole goal, once again, is for you to build out 7 streams of passive income for your family, and then go on to build streams number 8, 9, 10 through 12, and have those be allocated to go make a difference in the world. Maybe go build an orphanage, or pay, fund missionaries overseas, or build a school overseas, whatever it is, you're called here to make a difference. And that's why I believe that you're here today with us. So next, we're going to take a quick break, and then we'll pull up and do a demo of the Deal Hunter, the AI. So people get
Yes, it's
it.
gonna be
This is
amazing.
where the nerdy fun kicks in. Anybody
Yes.
else for some nerdy fun? Put nerdy fun in the chat.
Woohoo.
Can't
Let's
be the
have some
only nerd
real.
here. Nerdy fun.
How many minutes do we want to take a break for?
Let's take a quick 5-minute break so everybody can, take a bio break. And then I love it, Victoria. She wants nerdy fun.
Yeah, definitely was not nerdy fun.
So everybody take a quick break, and then we're gonna come back and we're gonna do the thing.
Okay, we'll be back at 27 after the hour.
All right, we'll see everybody back here and shortly. Where's the? I don't think it needs a charge. What's on the schedule?
Tell me you'll need to mute.
All right, welcome back. We are ready for the nerdy fun that we've been promised. So excited. Oh, there's the king of nerdy fun right there, Tommy, who created all of this amazing amazingness. So we're gonna get started. Welcome back, everyone. Tommy, you ready to show off your wizard powers?
Yeah, we'll get into this.
So I'll start by saying that, first of all, we're in ChatGPT, and having the free version of ChatGPT will only get you so far. You get what you pay for. But if you go into the $20 a month version of ChatGPT, this is where the magic happens. So with that, the first place that we go is you go into the GPTs, right? And this gives you access to the GPT store. So for all of these who don't, the store platform, I don't know, marketplace. There's all the GPTs, and you can search by 1,000 different things.
And a lot of people don't understand what a GPT model is. So if you go back to that real quick, let's just look at that marketplace one more time.
Link is in the chat as well.
And what you're able to see here is like they've got trending models, they've got GPTs that there's models that were made by ChatGPT, like for example, Dolly. Dolly is a named after kind of like the famous painter, Salvador Dali. So if you scroll through and you go and look at different things that show up on this, these are just models that are set up with already pre-programmed, pre-set up, pre-established prompts and step-by-step prompts to help you achieve all kinds of things. So in lifestyle and education and business and research analysis, you know, even photo generation and making stuff like architecture AI. That one right there is very helpful to people that want to, like, say, for example, redesign a room or use an architect, but not have to pay one, right? And so these tools are here for that stuff, and it's pretty amazing. What we did with Titan Impact Group was we created some of these, and one of them we created was the Deal Hunter by Landshark. Deal Hunter speaks for itself, but Landshark is a little bit interesting. Landshark literally is kind of the way that if you imagine, like real estate is kind of like an ecosystem. It's kind of like the ocean. And so what purpose a shark serves in the ocean is actually it creates a food chain. It's the top of the food chain. The shark is the top of the food chain, and it's because what it does is what it doesn't eat, it passes on to other animals, right? A shark eating a whale, for example. How do you, the old saying, how do you eat an elephant? One bite at a time. Well, it's the same way you eat same way you eat a whale, one bite at a time. So the shark comes in, he takes a big bite, he, takes that bite and he shakes it around. And when he's shaking around trying to get it off of the whale, it's creating all these little pieces that spread out to all the other fish in the sea and the crabs and the lobsters and all these other animals. And so that's the mindset that we had behind the Landshark Deal Hunter by Landshark. The Landshark Mastermind is a collective group of people that are out doing real estate like sharks do in the ocean, creating ecosystems and food chains, right? And that's what we wanted to do and accomplish with this. So if you go to Deal Hunter by Landshark, we're going to run a deal. And so Katya sent over a deal for us to take a look at. Did you include it in the chat? The one that you sent to me.
Let me get to
You got it?
Did
So
you email it?
you sent it to me in a text?
In an email. Do you want me to open the email or the chat?
No, if it's an email, Catherine has it.
Oh. goodness.
So what Deal Hunter does is it does an extensive amount of work that, say, a realtor would have done, or maybe a title agent would have done. Somebody that is in the profession understands the amount of work that goes into it. And so understanding that Deal Hunter gives people that are professionals time back. What you're doing with AI is buying time, right? So
Those are text, okay. Then I can't do anything.
Do you need the address? Yeah. Would you want me to just copy?
yeah, just tell us just put it in the chat or tell us the address.
Here, we can do a dictate. Let me share the screen again. Okay,
And so what's the address?
Tonopah land deal at 41101 West Indian School Road, Lot 1.
That was not the one I was thinking of.
Oh. That's the one you sent me.
so to get clear, we're talking to it because you get better results when you actually talk to it versus type. And so if you're paying attention down here, the talking, again, gives more context that typing will actually cut out because we tend to shorten up what we're trying to say with typing because it takes too long. So that's why we encourage you to actually talk through the whole thing. And AI will pick up on way more
In my
than you
email.
realize.
It's in my email. It's literally the last one that was sent in there. We have a call with them at 3 o'clock today.
Oh, the Palisade.
Yep,
Oh, I didn't know it was that one.
yep.
Okay, so in this email, what do you want me to pull?
The address, 16321 Pacific Coast Highway. So this was a deal that Katya pulled to the table a couple weeks ago. Katya is a integral member of the Land Shark Mastermind, very smart in all the things that she does, Land Shark Mastermind. And so this was brought to her attention as a proper probability. And what we did was, when we designed this app, we set it up so that it was super easy to get information from it. You could prompt it with information that then you could be a prompt wizard, sit here and say, acting in the role of a 30-year developer that has extensive relationships with the city, county, and the state, and like you can write that prompt, or you can just get the address and put in 3 simple words: run this deal. Run this deal is a very basic prompt. And the reason why we supply a basic prompt is so that the way we built this system was so that I could just take a basic address and do this. I could take a screenshot. I could take a flyer, a PDF, and load it in here and do this. And you can see right there that it's doing 19 seconds of thinking. Let's see how much work it got done in 19 seconds. And so it shows here that this particular one has 2 likely matches. The first one is this one right here. That's an asset called Turks what's it called? Turks Cocktail. I don't know. Sounds like a pretty fancy place, but it's Zone Sunset Beach Tourist, and it's located out there on Sunset Beach. It doesn't necessarily give any more details than that, but it shows that there's an asking price of $3.25 million, and that it's got about a 2,500 square foot building sitting on 0.14 acres. We know because we've already run this deal, not necessarily the deal we're looking at. The other example should be underneath this. This one here shows that also is attached to a 19-acre property, and this one's more than the deal right there. And what this is it's it was a, what was it, a mobile home park? 270 something acres that burnt down during, during the Palisades fire. And so we ran this deal and looked at the different opportunities to go back at it again. So it says the max clean offer is $260,000. They ain't going for that.
They're not going for that.
No, what was the price on it?
No, it says that if that's the verified NOI.
Right,
They are asking for
$90 million. 90 million dollars. And why that kind of makes sense is because of where it's located. Right? So we're gonna do some teaching to Deal Hunter a little bit about this. Because if you click that button right there, we'll show you how we do this. We're actually looking at the 19-acre property. It was a mobile home park prior to the Palisades fire. And so I believe it was listed prior to the fire, but now all the homes have been burnt down. Can you try to do some deep dive and digging on this property now? And so this is how we do, this is an example of how we do a property, because like Katya said, there's a big difference between what Deal Hunter found and what Katya is saying. Katya is saying they want $90 million. What we're finding is that it's probably worth $3 million.
But I had to ask that and reach out directly to the broker, and Deal Hunter sent me all the broker information and exactly what to email.
Yep. So Katya has already been kind of working at this a lot more extensive than we are, but this is just a good opportunity to show an example. So you can see here that this is kind of what it looked like prior to. Look at these photos. This is what they're wanting $90 million for. Take a look at these photos real quick. So along that stretch of highway, this is where you see the mobile homes down there. These mobile homes you're looking at right here in this picture, are all burnt to the ground. There's nothing left. But before they burnt to the ground, they were selling for how much? Million two, right? Like and that was the part that blew my mind was, oh, look, my birthday, go back. 1/16/2021. Look at that. So, but yeah, that little trailer right there, those little trailers right there, $1 million trailers, $1.5 million. And it's because of where they're at. They're at, they're at the ocean. So what we looked at, go ahead and jump back over now. It understands now what we're looking at a little bit closer, right? So there's no disclosures, disclosed information on LoopNet or anything like that. So, but it shows that the fire started on January 7th, contained by January 31st. There was 6,800 structures and 975 that were damaged. So former residents still may have a claim at the place. So that's something that, need to take a look at. Coastal Commission is a risk because they say they actually want it to go to what's called RE40, meaning that you cannot build anything on property less than 40. You got to have at least 40,000 square foot to build something there. Okay, so they want it subdivided. So the geotechnical risks that are there basically are that 19, it shows here that the Coastal Commission record shows that there's been slope failures in 82, 98, 2001, and 2005, reporting that the area right here has a propensity of there being a landslide in the future. So again, things to be concerned about that you would not normally find in a due diligence report, right? So going down a little bit more shows what our exit strategies could possibly be, such as rebuilding a modern manufactured home, mobile home community, like a tiny home community, doing a ultra luxury estate subdivision where we split it into the 40,000 square foot minimums, creating somewhere around 18 to 21 lots, and then building out gigantic homes that are otherwise beachfront properties for $5-10 million a piece. So doing the math on that, if you did $10 million homes, 18 $10 million homes is how much?
Say that again.
$180 million, right? 10-18 million dollar homes.
Yeah.
So that's the other way it's suggesting we can roll. And then you've got the mixed income multifamily development. Not something I suppose that they would be interested in doing, but you know, we'd have to do some, you know, discussion with the city at 3 o'clock to do that, right?
Yeah.
So we're having a meeting at 3 o'clock to find out. So here you can see for 10 luxury lots, the raw land value is about $31 million. Not per lot, just for the 10 lots. Doing 15 lots goes up to 47 to 58. Now you can see why they're getting around the $90 million mark, right? $90 million. It says right there, do not chase 70 to 90 million unless you can prove 18 plus premium lots or higher density path. So we would want to make sure that the city or whoever's there will allow us to build you know, a $10 million or $20 million home and do 18 of them right there. They may only allow you to do 5.
Actually, no, back from 6.
What did they say?
That's what I was looking at. You were asking the 18.
Okay, so she's
I was multi-focusing. Let's.
Are you unmuted?
Can you hear me from the microphone, or should I unmute?
no unmute. You can't hear us over here.
We can
So
hear
I
you,
can hear you.
Katya.
Oh, you can hear me.
Yeah, we can hear you.
So should I unmute? Should I stay?
I think she's picking up on this microphone here.
Perfect. Awesome. Okay. So let's see what's.
And so on this one, Katya is a sponsor from Landshark Mastermind. We get these deals, sponsors bring them forward to deep dive them and understand them. And so Katya has been working hard on this one. So what did it say?
So I asked several questions that Deal Hunter actually helped me create. And the first one was, can this property be reestablished as a mobile home park? And the answer is yes. Under California Health and Safety Code Division 13, Part 2.1, and Title 25 of the California Code of Regulations, HCD allows the reestablishment of a mobile home park on a previously permitted site. So, and they also explained a bunch of different information about the title, divisions, permits, and it says a park rebuilt to previously permitted standards on the same general footprint with no significant changes to numbers or layout can be considered a continuation. So in that case, we don't have to completely redo the site.
Right.
And so any substantial redesign, including modifying a lot of the spacing, density, utility infrastructure, or safety features, triggers reclassification as a new park. And those would require a full set of plans and permit applications to complete.
All right. And so what Deal Hunter is trying to do here is help us put together an LOI. And if you don't know what that is, that's a letter of intent. And with the information that Katya just gave us, like we're able to understand what that looks like. So let's run a little bit more deal here and see what we can come up with. Some of the things that gives us are like these due diligence checklists. And what we do is we spread those out across our group to get these things done. We're using AI to help us do it. Most of the stuff in that land use entitlement thing was just answered by Katya, and she was able to figure that out. Katya, who did you call to find out those informations? That you just
I called. I'm not allowed to share my screen, am I?
I mean, nah, I mean you can.
I said, give me the emails, phone number, scripts, and questions to ask.
Right, everything.
To everybody. And it said, okay, first you're gonna call LA City Planning, then the Palisades.
So really quick, who did you ask that question to?
The Land Shark Chat GPT.
Yes.
Yeah,
And
so
it gave me
Deal Hunter gave her everything necessary to help her get these questions answered, to get due diligence done faster, quicker, better. Again, Katya
She shows up every morning at 9 a.m.
is a Land Shark member.
doing it.
She's doing the thing. She doesn't have 30 years of experience. She hasn't been, she's not a multi-million-dollar investor.
Yeah.
She's a hardworking entrepreneur graduate from California University, where they're teaching how to be an entrepreneur in college, right?
Oh, and she graduates next semester. Woohoo!
One more semester and she's done, and she'll be a official, like, degreed entrepreneur. And that's crazy to hear, because this is something that's brand new. Prior to COVID, they had 0 degrees for entrepreneurs. And so that's why I myself spent time and energy in getting all the geeky, nerdy fun involved in here. So, all right. So you can see here that the Sharks verdict says it's high risk, high upside, but do not buy it without going through the work, right?
So Katya, you got the script, so it told you who to call,
Yes.
what to say.
Yes. Yeah, it gave me the phone numbers and then what to say verbally. And then it also gave me the email and what to say if they do respond and if they don't respond. And it gave it for the planning, for the commission, for the for everybody. And it just gave me an easy list in the order it wanted me to ask. And I just went down the road.
So if you had to figure this out on your own, how long do you think it would take you to find all that?
I don't even know how long it would take because I've been using the Land Shark from the get-go. But I think even more than time is the confidence to actually follow through with it. Because when you have to find everything on your own, it's so scary and it's so intimidating. But when you have something kind of reinforcing your actions and answering your questions immediately, you can do things so much quicker and so much you feel better about it too.
Yeah, for sure. And so one of the things we're going to do on here, we'll do a little bit more deep dive here, as we're coming up on the top of the hour. I want to know how many houses were in here prior to the fire. And then we want to deep dive what that looks like now with all those homeowners out of there. We'd like to see about putting a tiny house community out there. We know by looking at the records that the tiny houses do really well selling out there, because currently Cavco is selling they're selling their single family models out there. They're selling single wide trailers out there they're basically building them for about $140 or $160 a square foot, and then selling them for somewhere in the range of $2,000 to $2,500 a square foot. Run that deal.
The markup is insane.
And so while it's thinking about this, Deal Hunter is not the only AI model that we use. We've been using other AI models, and we'll get into some of the demonstrations on that this week. Tomorrow, we'll probably maybe talk about My 7 Streams, because we've got some home flippers going to be in here, and why it's important to use free estimates. Free estimates is a model that we've designed and developed to help people that do rehabs on homes or do fix and flips to get good, accurate numbers. So that way, when they get into doing the fix and flip, they're not surprised by what it's going to cost or what it's going to take to get stuff done. And so literally what they're able to do is take pictures, submit them, put the zip code in, submit those, and say, give me an estimate. And it comes back with some amazing info. So right here, it looks like this was 173 spaces before. And so looking at it, it shows that with 173 spaces, it says here that the critical legal trap is you cannot treat that all homeowners are gone or all rights are gone. Excuse me. The reason why is because there may be people that didn't get paid off when their house burnt. Maybe they do. we'll have to do a little bit of digging into that. But the idea is that we replace those houses out there. And it's helping me also kind of mitigate or reduce the amount of issues that we have out there. So it shows here that HCD's tiny home bulletin distinguishes manufactured homes as transportable structures built after June 15th, 1976, that are at least 8 foot wide and or more than 40 foot long and at least 320 square foot when erected. And so this is their rule, right? The tiny coastal call them tiny coastal manufactured homes in the sales pitch. It's giving me suggestions there, right? Because going back and saying that they're a mobile home park, people might not want to do anything with that. So what we have is, it shows here that our assumptions are that the build cost is about 140 to 160. We're selling them for 2,000 to 2,500. That is a massive spread. And it says, the question is not whether the homes can sell. The question is whether you can legally control enough inventory to sell at that market price. So what we're looking at is, I think it's doing the numbers wrong a little bit. Okay, so if we did all the homes, this is what it would come out to. So it's totaling everything up. So if we bought the property for 9 million, we built everything for 25 million, that's still 90 and 25 is 115 million. And so at the end of it, at 115 million, we'd sell all the units total for about 3,310,000. So that's not a bad profit. That's something that we'd like to offer to investors, right? So I'm not saying that we're going to clear that much. That's just on the houses, because we still got to spend at least another 100 million in getting that property ready to put those houses on. Infrastructure, cleaning the dirt.
I think that there's still like burnt cars on the lot.
Right. There's
Clean it out.
yeah, it's got to be cleaned up, and those all that dirt's got to be. We're probably going to have to remove
We have to redo the electrical.
a massive amount of dirt to get new dirt in there to build on top of, right? And because it did say that there's some geotechnical issues, but yeah, all the electric's got to be replaced, all the plumbing, all the sewer,
Yeah,
all that stuff's going to be redone, right? So there's another 100 million on that. Laura's hands look scary,
Like.
like floating hands. Right? So that's one of the other things we do on the Deal Hunter 9 o'clock show every day, Monday through Friday. We do this right here, and we go through these things. So showing how to get into these and structure these is important. So we show people how to do this, but for the purposes of Titan 23, we do this on a daily basis, multiple deals at a time. So, and we know because we no longer are just picking deals and saying, okay, well, maybe this will work. It goes through this process or we don't touch it. So the reality check says, can you sell all 173 units? Probably not without selling prior residence rights. So we'll have to figure that out and see what that looks like. So the Kathy, can you do math real quick? What is 800 times 2250?
1.8.
1.8 million. Yep. And so that's why I'm thinking that's about the price that it would fall into. So pad rent values, out there, they're getting pad rents between $1,500 and $4,000 a month. So this is what the place would make after the fact. Right. And so it says here that there's a hybrid of residents return versus premium inventory. Let's just say that 86 people return and then there's 87 remaining pad leases. Still working out the numbers for us and showing us our deals here. The verdict is that we would need to, again, deep dive a little bit into what Katya is going to be showing the county and city later today. It also says that this is not flat dirt. It wants us to take into consideration that right there it says worst case scenario is going to be 40 to 70 million dollars to do the work. So it says acquisition price guide. If the seller wants 90 million, then we would want to be able to build the 173 homes. We want to charge 2,500 to 4,000 a month, just rent on the dirt that they're parked on. So this is what it's going to offer, or suggest we offer, right? And so we do option payment of 1 to 2 million, a feasibility study of 180 days. We ask for a 24-month extension before we close, and then a base purchase price of $55 million. It'll put all this together for us so that we can send this over to the seller and say, what do you think? If they say no, they say no, right? We can always come back and try again. So the other thing this could turn into is a private equity land bank where we buy it and just sit on it. Why would we do that? Why would we do that? You know, if they're asking $90 million for it today, what do you think it's going to be worth after the Palisades gets all cleaned up and nice and stuff in, say, 10 years? What do you think it would be worth in 10 years? Right? So if we put $90 million into it today and then waited 10 years, let's just say that it appreciated for, I don't know, 5% a year. We know that California does have land values going up. So we clean it up and then just let it sit. Let it sit and wait. So let's take a look at it real quick. Go ahead and go to the dictate button and we'll run this. We are looking at this from two angles. We want to pay $90 million for it, clean it up, and do a minimal light clean on it, and then sit on it for 10 years. What is the current value increase year after year for this type of property? And tell us what it's going to be worth at year 10. What's it going to be worth in 2036 after we get it cleaned up so we can sell it as raw land again in 10 years? And so we'll get a good idea what this looks like. So right now it's 12 o'clock. If you guys are in the Arizona timeframe, it's almost lunch. And so my belly's growling already. So what are we doing for lunch while this thing's thinking?
Well, we've got, so
Let's
at
take-
12:05, we've got deal structure walkthrough,
Yeah,
then Q&A, and then we close for the day at 12:55.
all right. So what we'll do is we're gonna actually go over and work on Titan 23 here in a minute, but let's just see what it said here for our land bank opportunity. Scroll down.
Can you scroll? Oh, yeah. So.
I can scroll. All right, and so we can see here that at 90 million, and we're buying at the asking range, so a 10-year hold only works if the following things happen. So current appreciation read shows that Pacific Palisades home values remain down year over year after the fire. So Zillow shows the average Pacific Palisades home value about 3 million, roughly down 10% over the last year. So go down and take a look at this. The hold strategy shows a bear market, a base market, a bull market, a hero market. I like to use a base market. So annual appreciation is 4 to 5% over, year after year. So if we look at the different appreciations from 2 or 3% to 8%, if we bought it for 90 million in 2036, 10 years from now, it's only going to appreciate up to 120 million, $121 million. And so that being said, it's a slow grower, whereas by 10 years at 8%, it's going to be at 194. So the value of the property will go up, but not to the point where anybody's going to get rich, not having, 40% returns. These are 3% returns, but they're solid. They're locked in. So we'll end up with property taxes and stuff like that as well. So those are things that we have to be concerned about. Looking at it from a gross sale value, we're only going to have like a 1.15 to a 2.0 multiplier at most. Scroll down a little bit more. Yeah, our last multiplier is at 1.85. So the IRR on that is not very good. It's at best, the IRR is somewhere between, 5 and 7%. So, a passive hold on this is not attractive enough unless you believe that by 2036, the value will be at least 160 million. So that's what we would want or hope out of doing that hold. So does it make sense to do it? Not always, but it's good to show somebody, like in our investor pool, that we're thinking about worst case scenario. We're not saying, oh, this is the only way we can do it. No, there's multiple ways we can do it. And we've been able to come up with the answer to this very quickly. It doesn't take us days and weeks or months to figure this out. It's literally minutes, seconds, minutes, and hours. So. What?
No, keep going.
So. Keep going down. It shows that, it wants us to be cautious of saying that we're going to just do a minimal clean on it, because we will need to worry about like former residents and stuff like that. They may even require us to rebuild. Well, here's a better 10-year strategy. It says right here. And it says to prepare a conceptual plan for a rebuild, and that it will add anywhere between 2 and 5 million in soft costs. But it could add about a 20 to $50 million in resale. So you see how you can 10x? And this is a good example of that. Using Deal Hunter, we're able to identify these things, but without Deal Hunter, we can't see how quickly we can modify or when to jump through the hoop, if you will. So this is what we use it for. We can try to get them down to like 70 or 80 million. We can try to get them to do a 10-year carry for around 10 or 15 million. We can create 173 replacements. So our goal here, and it shows how when we break these deals down, what the best path forward is. So let's wrap this up, and we're gonna go on to another we're gonna go over to Titan 23 Fund Ops GPT. It's right there. And so you wanted to talk about what's the next thing?
So it says deal structure walkthrough.
Right. So we can do that through Titan 23, the GPT we created.
Okay.
And you can, like, we can walk through a deal that we've already done, so we can just validate.
Okay. So do you want to dictate to it?
Well, you know the deals better than I do. That you've already done.
So you just want me to ask? Tell it what we've already done.
So in the schedule, we were supposed to do what?
It says deal structure walkthrough.
Right, so we want to show them how we structure a deal, right?
So we can ask this GPT how to do it. I'm unclear what you're asking me to do.
We got to walk them through a deal, right?
Okay.
Is that what's on the schedule to do?
It says deal structure walkthrough.
Right, and so that's why I made this GPT, was so that you can show people how we go through a deal, how to walk through a deal.
Okay.
So do you want to use one of the deals you've already done? So that you can validate and verify the information it's providing?
Sure. What would I need to pull in?
Let's just do a different deal. Go ahead and so we want to create a new a new asset under Titan 23. Give us the steps on what it would take to start a new deal for Titan 23. So do you want, can you talk through this, or do you want me to do it?
Yeah, I feel better if you did because I'm still learning this.
Huh?
Okay, so can you all hear me? Okay. So the when we're structuring a deal, and again, this is for you as investors to understand. Again, we're educating you on how to structure deals, or if you're investing in a deal, for you to understand how a deal should actually be structured. And so it comes down to like basic information. There's a lot of information, but here's the cool part. Because of how we built out the GPT, you literally can have a conversation with it and it will go through, and you could put deals in and say, hey, does this have all of the items that I need as an investor to be able to analyze and do these deals and be able to understand it correctly? And it'll literally help you ask better questions, understand deeper, so that you become a more informed and educated investor, no matter what deals you're doing. So when deals are being structured, it's obviously the investment name, the asset type. Is it equity or debt? So let me go over that really quick for those who don't know. So equity is where you get to share in the profits of the deal. Debt is you're just the bank, meaning that there's a loan on it and that you've agreed to pay a certain percentage on that loan, much like a mortgage. Yeah.
So debt is fixed
Debt is
and
fixed.
equity depends on
Yep.
how much. Okay.
Exactly. That's how like our triple net lease commercial medical office space was equity. So they go along for the ride with us, meaning if it's a really great deal, we all get to celebrate. If it's a really crappy deal, we all get to celebrate. It's just a smaller celebration, but the debt is just fit like your car. When you buy a car, you agree, this is the amount of the loan, this is the percentage of interest you're going to pay, and that's what it is. That's it. Where like when we were doing the fix and flips, depending on the profit of the fix and flip, they would share in the profits. And so you have to understand, is it equity or debt? And then of course there's an executive summary about the whole thing. You want to make sure that the market research has been done and that the sponsor overview. This is super important to make sure that that background checks, deep dive background checks have been done. The SEC actually requires this of all sponsors. So you want to make sure that those have been done and that you actually get to, you know, see those. And so what are you looking for? Financial and criminal history, because if past predicts the future, you want to pay attention to that. And I got lots of stories around all of that, that how I've been saved inside of having full deep dive research on all sponsors. So then you look at how the actual structure is. Is it full control? Is it co-GP or co-manager or a passive investor? So each one of them comes with a different level of participation and say. And then you want to look at the entity, how the entities are actually structured, the formation state, and then how the sponsors, operators, key principals, again, how everybody is structured inside this and what say they have and what control they have. This is super important. The next part to understand is if it is equity, like we just talked about, there's different ways that it can be structured. Is it a waterfall structure? Is it a preferred return? So the waterfall structure is, you thought in previous slides, there was class shares A, B, and C. Those are waterfall structures. Preferred returns, it means that you're going to be guaranteed a certain percentage return that you get paid, and then there's generally a waterfall or a promote structure after that. So then capital stack simply means how is the money being put together, meaning what percentage is debt and what are the numbers behind the debt, meaning the amount, the percentage, all that. Then what is the equity? And then what are the general partners getting paid? What are the limited partners? That is called a capital stack. And then, of course, what is the business plan? What is the exit strategy? We always start with the end in mind. Like everybody needs to understand, and you need to have multiple exit strategies because not all exit strategies happen exactly how we plan them out. Now, if it's debt, this is, again, like being the bank, because what I like being the bank is typically the debt is the first lien position, meaning if something goes sideways in the project, you will actually get the asset back, which means you'll get your money back. So that's super important. So the loan type, lien position, I just went over who the borrower is, what the collateral is that's protecting the debt. So you always want to make sure that the money is collateralized with actual assets that you can, if you had to, take it back, be able to recoup your money. That's super important. I got copious amounts of stories on that. What is the interest structure? Because there are some predatory lenders out there. That's really important. There are actual lenders out there that their whole business plan is to take over the property. So you want to be crystal clear what the lender's plan is as well, so that you're not trapped and you lose the property. Maturity and term, again, super important to understand this so that you make sure inside of the, keep at the end in mind that the debt gets paid back in the time before it expires. So financial details, this is where now all investments should tell you what the minimum investment is, the minimum allocation slice, the target rate, so how much they're raising, the distribution frequency, are they paying out the investors on a monthly, quarterly, annual, or at the end of the project basis? You need to understand all that, and how long you're going to be in the investment for, that needs to be clearly defined. And then what the reserve structure is, meaning how much money are they putting into basically another account, so that should things go sideways, because we all know things go sideways that you just didn't have the crystal ball to plan for, that there's enough money there so that they're not doing what's called a capital call, meaning that if something goes sideways, they have to go back to the investors and say, hey, oh, by the way, I know you invested this money into it, but now we need more money to keep the project on time and on budget. We don't want capital calls. So reserve structure is super important. And then the use of proceeds. How is the money being spent? This is really, really important. We had a long talk today on our walk this morning, which, by the way, if you ever want to come stay at the Bell Hotel, there's a whole, you're welcome to come stay at the Bell Hotel and get a whole 6 a.m. lessons all the way through to what we had the pickleball lessons at 10 p.m. last night.
6 a.m.
It never stops.
There's no rest.
I sort of let you sleep, but it's a boot camp. So the return on metrics, so IRR is internal rate of return, annualized return, and then what is your cash on cash return? So again, if you don't know what those are, I want to invite you to consider going over to use the Deal Hunter Land Shark. It's in the chat. You can use that and it'll actually answer all these questions for you, which is really, again, just, it's all education. It's just vocabulary. And here's the thing, these may sound like really big words, and typically Wall Street and them want you to think they're too big words and that you're too stupid to understand all this, which you're not, so that you'll give your money to them to just manage. But once you understand the basic vocabulary of this, you're like, oh, that's all that means? Yes, that's all that means. And be able to literally manage it yourself, because rule number one, no one's going to care more about your money than you. So this is why we're helping you understand the rules to the game. So in the fund, you need to understand what the management fees are, the success fees, the due diligence fees, acquisition fees, finance fees. You want to understand all this and that you're not being feed to death. Because again, all the profits can be sucked out of this. So you need to make sure that it's fair and reasonable. And the Deal Hunter GPT will actually tell you what's fair and reasonable. Then there's the lower tier, which is what is the promote, the origination fees, the interest spread, affiliate compensation. All this needs to be legally disclosed. This is really important. Then you need to really pay attention to the risk factors. And here's the thing, you guys, every single deal has risks. If you have an investment that says that there's no risks, they're lying to you. I'll just say that. They're lying, because everything has risks. So you want to make sure that you understand what are the market risks and how are they mitigating for them. Sponsor risk, operational risk, leverage, execution, regulatory, asset-specific risks. You want to make sure all those are spelled out. And then what are they doing to actually mitigate against it? So if they're not thinking of these things and paying attention and putting into place the ways to mitigate this, again, run. Because again, they're not looking at the whole picture. This is super important. So then allocation mechanics. So the unit structure, class and subclass structure, auto allocation eligibility, the withdrawal restrictions, reinvestment. So again, if you don't know what these mean, please go use the Deal Hunter Chat GPT and it'll actually give you all these. So phase 2 is the internal underwriting and due diligence. So here's why we love this. Again, these are all the things that obviously that we do, we're required to do by the SEC, but it went over all of this. So the sponsor background check, the financial underwriting, the legal review, like entity verification. All of this is like we trust, but we verify. This is really important. You as an investor should be doing this as well. And again, you can use these AI tools that we've built so that you can be doing this. And then collecting supporting documents, you need to make sure you have all these and you've gone through all of these. And again, any offer that you have, these should all be in what's called a data room. And inside the data room, you get access to all of this information. If anything's missing, go back and ask for it. Titan 23. So these are the stages. So we start by creating an internal memo, the investor allocation structure, compensation mapping. And then there's phase 4, which is disclosure drafts. So we draft up the disclosure documents with our legal team, making sure that everything is there and everything is covered. So you can see this is a lot. This takes an enormous amount. And then making sure the legal compliance is there so that the securities attorney has reviewed it. The 506C compliance means we are a 506C fund, meaning that it is for accredited investors only.
The Reg D makes it accredited investors only, or 506C Reg A is for non-accredited investors, but you can't do any advertising or solicitation. So, but the other part of this as well is that we utilize these tools, like for example, this Chat GPT we're using, it'll help us prepare docs, but we don't put the docs together and put them out. We take these docs over to a lawyer who's charging us $900 an hour. And if we can minimize how much time he's got to spend preparing the docs, we save that money is then saved and put back into the fund, and the fund then doesn't have to spend that money, which then goes back to the investors.
Yeah, so this is all, you have to understand, like, behind every deal, all of this is, should be done. You understand a lot of it, where the fees are going, why it all has to be done. This is all to protect all the investors. And then there's the marketing and capital raise. So it takes an enormous amount of effort to be able to do the marketing and do it properly. And then make sure we follow the guidelines of what's prohibited. And then investor allocation and closing. So this is, again, how our whole workflow happens. And then post-close operations. Again, you guys are just getting behind the scenes and how pretty much every fund should be setting up and doing their fund. So you can see it is an enormous amount of work. So if you want to be an operator yourself, you want to, be the operator, be the one that's not only doing the deal, running the deal, but now you have to be in legal compliance to raise the money to do the whole deal. This is why companies like ours exist, because we come along and find really good operators who just want to stay in their lane and do the deal. And so we come in and we're able to, raise capital for all these different deals. And this is how we partner with and do extraordinary things. So again, that was a lot, and I know I went through a lot. Does anybody have any questions over all the things I went through?
Do you mind, before we go on,
Sure.
I would like to go back to Titan 23 and just build out a diagram, because I'm very much a visual learner. And so I like seeing things that kind of help me put stuff together. Go ahead and build out a diagram that kind of explains and lays out how all of this would look for an investor, and so that we can make it easier for people to understand. And so Titan 23 funds, Fund Ops GPT is a tool that we're using, but also encouraging our investors to go use, because it helps them understand better where and what they're getting into when it comes to investing in this type of passive income stream. This is not the end all beat all of income streams. We have 7 streams within Titan 23 because we have different asset positions. But some people, for example, they might say, for example, write a book, and a book would be a passive stream of income. Somebody might start a business and put an operator in place. That's a stream of income. So these are all things that we want to teach to, and Titan 23 is just an example of that. So does that make sense?
Yeah. So it's still creating the image. Does anybody have any questions? This is, here's your image. So let me just share.
Okay.
So out of that really long, no items selected. Come on. There we go. Okay. So this did a pretty amazing job going through the complexity of what a fund goes through to make sure all the things happen and the way they're supposed to make sure that we're protecting the money, which is the investor. So any deal that you're a part of, you want to make sure that these are all the things that the fund has covered or the sponsor operator have covered to make sure that you as the investor are protected. Or if you're a sponsor, make sure that you're doing all these things as well.
This is
I think-
actually very helpful, as it gives us steps for potential investors that are, I'm actually getting acquainted with, that are from Canada, that are wanting to do this because they also want to process, their investor visa, so eventually, just like, what was the lady's name, Tommy, that we were speaking with before from Florida or wherever she was from?
when
When she was saying that she would claim and she created the the investor visa program or whatever.
That would have been Catherine's very best friend in the whole wide world, Lauren.
Yes, Lauren.
Lauren.
Dear
Lauren,
Lauren.
the immigration attorney.
No, the
Right.
one that created the immigration law, not the
Yeah,
immigration attorney. Remember that?
oh yeah, that's right.
Different.
She invented the immigration law around EB2 investors, EB5 investors.
So Catherine, I'm glad that I was that you're gonna be able to, I guess, kind of speak from yourself as a Canadian native, and also my sister-in-law kind of did the same process. And we're gonna be able to speak with future, because there's a lot of we all know that there's a lot of Canadian citizens that are wanting to invest, and they need the right team here. So I think this is a great procedure for us to show them and walk them through. And you're going to be a great force in connecting and kind of sharing uh, you know, your experience on all this, and kind of bring it to them, and they can be motivated with you. So, if we can make it as user friendly as we can to kind of show them the process, more power to it.
Yeah.
And those of you that are just catching up, Roman's part of our Land Shark Mastermind. He's one of the founders of the Land Shark Mastermind, Dr. Ning Young Chen. What? Dr. Ning Young Chen and Roman and I started Land Shark Mastermind over a year ago. And so the Land Shark Mastermind started over a year ago as a way of bringing together all the people that wanted to do real estate investing on an impactful level. And so Roman has been a partner with me for over half a decade in opportunity zone development. Roman has been doing development and doing investing for high net worth individuals for quite a long time. And so his background is extensive. And so he's going to be speaking on on Thursday about opportunity zones and all the things that are coming forward from that. So I appreciate him coming in and putting info in. So I'd like to open up the session for some Q&A for maybe the next 15-20 minutes if that's necessary.
Yeah.
So
and in Q&A, and what did you learn so far today? This is just day one. We're going to dig further into
every person's going to have to talk about it. So don't think, oh, I'm just going to sit here and be quiet because I'm going to call names. So, and so we're going to start with Amora because she's just smiling so much.
for attendees, just type it in the chat.
And we will bring forth your questions up too. Well, one, I really love how you broke down the different terms and stuff like that, because I think it can feel overwhelming when you're hearing all this multiple, like the language and all of that, especially of a fund, because it's something that like you were never taught about. Like this was never a conversation at a dinner table, anything, at a barbecue, nothing. So one, I just appreciate you like breaking that down. And then also just, and I definitely know it from the mastermind that we're in, just the amount of time that's saved by using Land Shark, like, is massive. And I think just like Katya talked about, like, you can ask it to do so many aspects of that would take, like looking up the telephone number, all of those things take time, and it really is important when you're investing, like what you're using your time for. Of course, this cannot make every decision for you. There are things we each need to make decisions about, but wow, it helps you just broaden your mind to other ideas of how a property or land could be used. So
I love that, Amor. So it's funny, Sarah said she learned she needs a bigger brain or shorthand at least. Or you can upgrade the VIP and have all the recordings, because again, how many times do we hear about this, right? And I want to share this. Sarah, you bring up, I love this. Laura and I, decades ago, when we first started investing and doing all of this, doing buy and hold, we learned about this course to go to learn how to put a fund together. We were so not qualified to be in that room. And this is the perfect example of being in a room with people way smarter than us. And so I invite you to continue to be in rooms way smarter than you. So Laura and I went. We were the dumbest two in the room for sure. And we learned, we took copious amounts of notes way before AI, had these monster sized binders. I think it was like 5 inches thick. It was insane. And we learned how to do this. And like, who are we? We were nobodies doing all the things. And anyways, fast forward, put the book on the shelf, don't think much about it. 10 years later, an opportunity comes up for me to put a fund together. Had I have said no to being in that course and learning all those things and getting like understanding all the things and all the new definitions and really understanding all of it and not being intimidated that it was a hedge fund, right? Because how intimidating is that word? So rather than being intimidated by it, being curious about it, going and leaning in, learning all this, 10 years later, it totally paid off. And that's how Adam and I were a part of that vacation rental hedge fund, was because I was able to put it together. So that was a really big deal. And so what you're learning here, Sarah, and for all of you, is exactly that. Maybe this isn't the right time, but I promise you there is going to come a point in your investing journey where all of a sudden you'll be like, wait a second. I remember I learned that thing, and that thing and all the things that you're learning now apply to your investment journey now. So I applaud you and acknowledge you for being here and learning all of this, because all this is going to apply in and to your investment journey along the way. So Amor, thank you. Like, how many times have you been here, Katya? All of you are part of the mastermind. Again, 9 a.m. all of you are showing up and hearing this stuff again and again and again. And you got to hear something like 21 times before your brain even fully absorbs it and gets it. Right. So if this is the first time you're hearing this, like, congratulations to you. And now you need 20 more times. But then there's the applied knowledge as well. So that's the next piece, is like, I don't care what you know, I care what you're going to do with it. So what are y'all going to do with what you learned?
Let's ask Tina next. Tina, what's going on? How do you feel about learning all about Titan 23 today?
Investor.
Yeah.
Yeah.
How do I feel about learning everything about Titan 23?
Yeah. What do you have any questions today? And then what was your takeaways from today?
Oh, well, I love hearing about all the different opportunities you guys have going on, and there's a lot out there. You know, I just came from an investor meeting that I drove to in Kansas City, and there's a lot to learn. You know, there's just a lot to learn. There's a lot of language. There's a lot of fear, to be honest, you know, about getting into investments and knowing if you're in with the right operator and people. And so this is what I love about Titan. I mean, I've already invested, and I love the investment and I love the impact of the investment. And I trust you guys, and that's huge for me. And so this has been great to have you guys review everything that you're doing and how you're protecting the investors and the opportunities. And there's a ton to take away from today. I'm looking forward to the next 2 days.
Very cool. Very cool.
Tina, deeply grateful that you trust us, and deeply grateful that I've been able to add so many comments to your bank account and make an impact, right?
100%. Yes.
Yeah. So again, being a part of those investments and making an impact. And again, we don't take it lightly that our investors trust us. And my investors have been with me for years and years and years, because our whole thing is, you know, to protect the money no matter what. So
100%.
How about something from Victoria?
Hi guys, today has been amazing. So I think my biggest takeaway, first, I want to just thank you guys for like really putting this together and sharing. sharing all of your knowledge on this, right? Like some people got a chance to, register under in different ways, and just being able to just sit in the room and like glean this knowledge is everything. But I do want to say that I think what my takeaway was like hope. Um, a lot of times we don't recognize that these are places that we can be, because of lack of exposure when you're younger, or, like Amora said, like not growing up in rooms where these type of conversations were had. Um, and you guys are really taking the time to like break things down. Catherine sharing your story, letting us know like, hey, it doesn't matter where you come from, you can still be here. And even thinking about how we move forward with our future. Right now, I'm an empty nester. And so after you get finished taking care of kids and all of that, you sit back and wonder like, hey, what is it that I actually want to do? Or what are the possibilities? Or, hey, I actually have permission to do these things unapologetically, right? So I think this is a great space to like say, I mean, even looking at the AI that you guys have is like, if I don't know what to do, maybe I could just what I'm thinking about my possibilities to just drop it in this AI and just get some feedback on like what direction I should go in. And that is powerful because a lot of times we're not open just to talk to people or may not have the right audience. So I just thank you guys for dropping your gems. And I'm looking forward to how, all of this comes together. And even though I may not like um jump into every aspect of it, there is something that's gonna like ring in my ear to say like, oh, this is my thing. And so I'm excited to be like, this is my thing. So the AI thing is my thing right now. So I'm really excited about that. So yeah, it's been a great day. So thank you guys.
Absolutely. Thank you.
Yeah. And so I think Roman's been in here a good long time today. Roman, do you have anything to add? Because we're coming up on the end of the hour here. And so we want to get people out to go to lunch. Roman, do you have anything else you want to put into this?
You might be driving.
Or he's back at his regular thing. So
Sorry, I just couldn't get the mute button off. But in general, like I said, all the information that I've been, listening to, I'm just speaking for myself, and for those that are coming into this, the webinar series and how we're using our systems to be able to find deals and help others, make their deals profitable. It's a good way. Again, a lot of the new persons coming in. I know that we're trying to use AI to be efficient for our deals to come out and get a good analysis and synopsis of what if the deal is going to be a good deal or not. So other than that, like I said, we got a lot of things to learn from each other. I know that there's a lot of different people here that have different, life ventures going on, and we're more than delighted to hear from you and and see how we can actually come along and work together and collaborate with any projects coming along. And I'm just excited, excited for this group too.
Love that.
appreciate you being in here as well. Yes, and thank you, Tina, for what you had said as well. It looks like in the chat, Sarah said that she feels like I'm in a lot of these spaces where I'm the dumbest person in the room. Then you're the right person. Like
that you're here learning.
That's
extraordinary.
Learning is important, but I can tell you right now, I'm only good at one or two things. So I need all these other people around me to make what I'm good at be profound. Right. So I think for anyone who feels like they're the dumbest person in the room, find out what you can bring value to the room with, and then align that value with everybody else, and let what they do really well make your value exponential.
Yeah,
Right.
definitely.
And
Definitely.
the other thing I want to like be crystal clear, like we are not here to have you feel like the dumbest people in the room. Like I feel like I'm really, really committed to like bringing everything down to a language that you can go, oh, that's all it means. Oh, I totally get that.
Right.
Like that's the biggest thing that I really am committed to. Like, I don't want to speak over anybody's head. I want you to I want to bring it down so that it lands and it goes, oh, got this. So if there's at any point, any time that you feel like we're speaking over your head, please say something so that we can say it in another way that has you really get it and integrate it. Like, I really want you to get that. So again, being the dumbest person in the room isn't like, I hope you hear what I'm trying to say with that. Like, be here to learn. And if it's like, you're still like, what the heck are they talking about? Let us know, or plug it into the GPTs that we've given you. Like, we're trying to give you all the tools to have you be a smarter investor. Like, that's the biggest thing I want you to understand. Laura and I have been investing forever. Laura, I'd love to hear what your takeaway is from today.
Sure. So many things. Well, and there's an echo. Maybe I'll just.
Echo.
Can you hear me? Can you even hear me if I talk this way? They can hear you. Yep. Yeah. Okay. I'll just talk this way.
Okay. Can you hear me?
If I had to take a wild guess, you guys are all sitting in a room, right?
All right.
Yeah, they're
Room.
in the same
Yes,
room.
we're all sitting in a room together, Roman. Wild guess.
We're right.
So yeah, I've been, as Catherine said, we've been investing in, I don't know, 100 years now or something. And I think it's I'm a lifelong learner, so there's always an opportunity to learn. And the tools that are being taught today, a lot of them we had to learn the hard way. We had to learn them ourselves, and getting in those rooms and getting in front of people and reading the books and doing all those things. And I'm excited, Victoria, you hit on it. Amor, you hit on it. I'm excited for the tools that are coming, even inside of all the technical breakdowns today. I just dumped into chat, like, this is what happened this morning, and how do I resolve it so it doesn't happen tomorrow? So it's opening yourselves up and being available to learn, and to be willing to say, I don't know everything. And who, as Catherine's always saying, the who knows how, who are the who's that know how? Because that would have, I would have done down the Zoom path, but now I have a whole way to resolve what ended up happening this morning. And that shows up in my investing, that shows up in my parenting, that shows up everywhere, that willingness to just get myself surrounded by the 5 people, the 6 people that I want to be most influenced by.
I love that. Thank you.
Yeah, that's so
Yep.
amazing. Hey, can I just
And
jump in
then,
and say one thing?
I think we're only missing,
Oh, sorry, Tommy.
let me see, more, what are you saying? Hold on. Say again, more.
No, I was just saying, I think what's also really interesting to me about this, and I just keep reminding myself of this, like each one of us we're an expert in something. And when we start talking, like some people who are nurses and know medical lingo and all of that. And so when a nurse starts talking, you're like, I don't know. I don't know what you're saying. I like what? Or when a tech person does, and they're like, hey, the this and the, you're like, what? I don't. And so I think it's just reminding ourselves of that. We are all very, very smart, and we all hold knowledge. It's just this is something that wasn't really taught to us. And so for years, we have operated under not knowing a lot of this language and a lot of the opportunities. And so the exciting thing to me is that there are opportunities all around us. And we just have to make sure, like Catherine says, I just say that in my head all the time when something happens. I'm like, okay, who, who do I need to get with? Who knows this and can teach me about it and can say it. And so we all bring value in different ways on our job and the impacts that we make in our businesses and all of that. It's just now being like, okay, I don't know this part, but guess what? I'm going to get it because I'm going to get connected with the right who's. And that's what these 3 days is about. And December is about, is getting in the room with the right who's who know how. So then you can know how.
No, absolutely.
I love that.
And to touch on that live event a little bit more, December 1st through the 4th. Tickets are gonna go on sale in probably July 4th. Because we wanna make America wealthy again, and I'm really pushing hard on my team to come up with a way to get Trump interested in our mission with this. Getting America wealthy again, right? I want both sides. I don't care if you're Democrat or Republican. The way that they built the Opportunity Zone program is literally to make playing Monopoly in real life possible. And so you can play Monopoly in real life with the Opportunity Zone program. We've got the Southern Streamers Investor Club to help create capital gains investors. We'll get into that more. And then Titan 23. I mean, it's really about the different assets that we have and aligning those assets up with people that are goal driven, goal oriented, stuff like that. So speaking of goals, the last person I want to hear from today would be Katya. She made a trip in all the way from flew in across the country from LA to Phoenix. From LA to just did a little pedal job.
Across the state, yes.
Right.
Well, the main thing throughout this entire experience, and just so you guys know, I started real estate 3 months
You're
ago.
muted.
So, but they can hear me through the.
Okay.
Yeah, we can definitely hear you. We can hear you, Coach.
Okay. So I started real estate 3 months ago. And I have already gone through the motions of underwriting and creating and discussing, I think, 4 deals like intensely. And that
Multi-million-dollar deal.
yes, multi-million-dollar deals.
Not single family houses.
No. And so just the
jumped in.
education and the confidence and all this that I've learned in those 3 months is crazy. And Catherine always says collapsing timelines. And I love that phrase because you can scale so much faster with people supporting you next to you, allowing you to use resources that can move you so much further. So I came into it not knowing anything, like literally nothing. And I was not confident in this, and I was kind of uncertain in everything, and just using the AI to guide my education, and then using Catherine, Tommy, Laura, and the rest of the team to validate that has just moved me forward so much. So that just learning more about how a fund works, how you can utilize and maximize the AI, all this stuff is so valuable, and I'm so grateful.
So here's the thing I love. Again, it's the who that knows how. So Katya is insatiably curious and ended up getting connected. Her and I got connected through an introduction. And anyway, that's a whole fascinating conversation. I spoke at her. She took the initiative and created and talk about your group for just a sec.
Yeah, and you're in school too.
Yes.
Tell us about that. Tell us
So
about school.
21. Who would have loved this at 21 to have mentors?
Yes, me.
Mentoring you and letting you come stay at their Bell Hotel boot camp.
But
Some flames in the comments.
to everybody in the attendees section down there, if you want to do what Katya is doing, you have to become a member of the Land Shark Mastermind. This is not a sales pitch, it's just how it is. There's multiple ways to join it, but the best one is just pay the one-time one-time subscription and jump right in, right? Otherwise, you come here, you be like Katya is my bird dog. She's out looking for specific things that I want to invest in. So her and I are working together. She's a sponsor. I'm an operator. And so that's what we do. But Katya comes, 3 months with no knowledge, but she also has an expertise. And that's what I want you to explain is you're in school. What school are you going to? What degree are you graduating with in 3 months? And after that graduation, you're going to have a degree that does what? Based on what you've been doing while in school. You got 80 people coming to your events.
So last year, I'm 21 and I'm going to Cal State Fullerton and I'm studying entrepreneurship. And last year, January 1st, I decided that I want to learn about entrepreneurship and I want to meet people who have their own businesses and who start their own businesses and investors. So I decided to set a goal, and that's to take 10 entrepreneurs out to lunch. And so I thought that was insane. And I'm like, who wants to go out to lunch with me? And I started with one person, and then she invited me to her networking event. Then I went there and then met people that way. So I started saying yes to opportunities and meeting more and more people. And I'm like, this is fantastic. I want to share this with other people. So I decided to create a financial literacy challenge where I would invite other young adults and college students. And I think the age was 20 to 30 years old. And we would all sit together and we would learn how to make money, make impact, and invest and build businesses. And long story short, it expanded through a huge series of ups and downs and different ideas. And actually, Catherine was the one who I got introduced to her from somebody that I met at a networking event, and she helped me kind of develop it and plan it. And then she agreed to speak about the 7 streams of passive income. And she flew to California to speak live at this event. And we just had our last event last week or 2 weeks ago. And I've reached a total of 80 individuals to come listen to these amazing people talk about their experiences and their stories. So I don't even know where I'm going with this. Long story short, I just yes to opportunities and surrounding yourself with people who will lift you up.
So yeah,
it's
you
so
started this,
valuable.
and then you kept asking me to mentor you after.
Yes.
And what did I do?
Well, there was a lot of homework that I had to do.
I know about that, Katya. I know about that.
Lots of homework.
And still,
Lots of homework.
but it just shows you that if you take the steps, it is very rewarding.
And all the homework is relevant.
Yes.
No, it was. Yeah.
Books, for sure.
Yeah.
And then you mentioned them at the beginning of this
Yeah. A bunch of
session
books.
as well.
Yeah.
And you have to reread several chapters every day to really shift your mindset. So there was a huge shift, and very, very grateful.
Yep.
So I'm
No,
excited to graduate this year at the end of December with my bachelor's degree in entrepreneurship. And then I would love to take all the knowledge that I've built and all the experience that I've built and apply it towards building something better, bigger, with amazing people and making an impact. That's what I want to do. That's
she wants to do another entrepreneur type club
Oh yes, it's gonna.
involved in car club. Scottsdale Car Club has inspired her. So it's super cool to see all of that. The other thing is that, yeah, go ahead.
I don't know if you guys talk about the investor survey.
That's tomorrow.
That's
Tomorrow.
Okay,
Yeah,
so
we'll bring
stay
up the
tuned
investor survey.
back tomorrow. Because there's
Yep.
a survey that I took, and it tells you exactly, it aligns you perfectly with the investments that work for you and for your personality type and for your energy levels. And my investor survey basically said that this is the correct path to go, and I'm so excited about it. And I'm so thrilled, and I want to do it, and I think about it every day. So I'm super excited for you guys to hear about it tomorrow.
I love this. So thank you. So before we leave, here's what I have to say. So all these people here, I am deeply, deeply, deeply grateful for. Literally the copious amount of hours that they have spent for months and months and months behind the scenes. Insane amounts of spreadsheets, presentations, details galore, which I'm not a detail person, have literally like painstakingly put this thing together, and are also in the middle of putting together the in-person event in December that's going to be absolutely extraordinary. So on behalf of like everybody, like here's the thing: Amor, Victoria, Tommy, Laura, Katya, like all of you spending all this time putting this together, like thank you, because you have no idea the ripple effect of everybody who's here, that's watching here online, that's watching on all our live streams, the impact of them taking this knowledge and going and doing good in the world. Like you're the catalyst for that impact happening in the world. Like this is where your talents are getting exponentially taken and magnified in the world in ways that you never ever know. So on behalf of all those people, those properties, those communities that are being impacted by all the time, energy, and effort that it's taken for you to put this together, I just thank you on behalf of all of them that will never know you and you will never know them. But the impact is huge. It's very, very real. And it's like, it's there in the world. So just thank you for your hearts and your commitment and insane amounts of energy and time putting into all of this. And then I want to make sure that all of you fill out that your contact information inside of that link I just shared, because that's where we're building this whole community. Everybody gets to connect with each other. We're going to find the who's that know how to do all the fun things and continue to build all of this out.
And invite someone. All of us know someone who should have been hearing this today. And so bring someone on tomorrow, like, hey, sign up for VIP, like be in the room with your person, because we all know someone who needed this information as well, probably multiple people. And we have 2 more days left. So we have a lot more to learn.
Lot coming up tomorrow too. So
Yes.
I want to thank everyone for coming in. And if anybody is good at pickleball, make sure to put that in your profile. Because I played with 3 people last night that sucked. I lost every game playing with them. So I need a pickleball partner, because the pickleball partners I had last night were horrible, just horrible. So
His partners each won a game, and for some reason he was the only one who didn't win a game. So just laying off the
Just saying.
I'm just saying, like, the common denominator was all my partners didn't win. So we got to work on that. Just saying.
Oh, goodness. Thank
So,
you, guys.
we're going to wrap it up with a prayer, just like we do every other meeting. Heavenly Father, we thank you for the blessing of this day and the blessing of this life, the blessing of all the things that we encounter in your world. And we ask that you continue to guide us and bring people to us so that we can bring them the information that you put on our lives. It's the experiences that you've given us that we want to share. And we want to share it in a way that's helpful, good, and pure. We ask this in your name and your son's name. Amen.
Amen.
All right, everybody. Have a great day.
See you guys.
Everyone.
And we'll see you guys tomorrow.